the third machinery for during 2007, that is 1000 rupees. Total depreciation for 2007 is 11,000. So by 31/12/2007, by depreciation account 11,000. Right? So now, is there any other transaction made during 2007? That's all. Only one transaction. 2008 only there is transaction. Okay. So now you have to close the ledger balance. Debit side, total this side 1,14,500. So you have a balancing figure, closing value of the asset at the 2007, 1,03,500. You have to transfer to the closing balance will be the opening balance for next year. 1/1/2008, two balance brought down, that is 1,03,500.
3,500.
Right. Then now, next one, you have to see the problem. On 1/1/2008, 1/3 of the machinery which was purchased on 1/4/2006 became obsolete and was sold for rupees 6,000. What does it mean? First machinery, not whole machinery. 1/3 of the machinery is become obsolete. So in that case, what you have to do? What is the value of 1/3 of the machinery? 20,000, right? For that 20,000, you have to find out what is the book value. What is the depreciation you have allotted for 2006, 2007? That you have to deduct it. You will get the book value. My book value of the asset minus sale value, you have to find out profit or loss on sale of machinery. Okay, see this workings. Profit or loss on sale of machinery. First, cost of the machinery on 1/4/2006. That is, first machinery value is 60,000 into 1/3. 1/3 machinery is 20,000. 2006 depreciation for 1/3 machinery, that is 20,000 into 10% into 9 months. Okay, 9 months only you have utilized. So 1,500. Second year 2007, 10% depreciation on this 1/3 machinery, that is 20,000 into 10%, 2,000. So total depreciation, because you see here at the time of sale, you have beginning date itself you are selling out. So suppose instead of 1/4, if it is given 3 months, you have to calculate depreciation for 2008. Okay, so here no need, because 1/1/2008 itself you are disposing, right? So no depreciation for 2008. So what is the total depreciation? 3,500 minus 20,000. The book value of the disposing asset is 16,500.
Ma'am, I have 2 questions.
Hello?
Are we allowed to use calculator? And number 2, are we supposed to show the working in the exam sheet?
You can utilize your calculator, but these are all workings are part of your answer. You have to show in the answer sheet.
Okay, thank you.
So what is the book value of the asset? 20,000 minus 3,500. Book value of the asset, cost of the machinery. That means book value of the machinery 16,500 minus sale value 16,500 worth of machinery. You are selling at rupees 6,000 only. Is it profit or loss? Profit or loss on sale of 1/3?
Loss.
Loss on sale of machinery is 10,500. Okay. So now you have to write the journal entry. When you are disposing the asset, what is the journal entry? When you are selling your asset, what is the journal? What comes in? Sale of your machinery.
Cash.
Debit what comes in, credit what goes out.
Cash comes in.
So cash or bank account data to machinery account. So machinery account credit side 1/1/2008 by bank account 6,000. You understand? By bank account 6,000. Then by profit and loss account. Profit and loss account, that is loss on sale of machinery. Loss on sale of machinery means what is the entry? Debit all the expenses and losses. Loss means you have to debit, right? Profit and loss, you have to debit the profit and loss account, credit the machinery account, right? So by profit and loss account, that is loss on sale of machinery 10,500. You understand? Right? Then we have to calculate depreciation for all three machinery. See, come to workings in 2008. So first machinery, how much will be there? Only 2/3. 1/3 we have calculated here. Okay. So 2/3 of the machinery you are using whole year. So what is the depreciation? 40,000 into 10%, 4,000. Third machinery is second machinery 40,000, third machinery 20,000. So totally 60,000 for 1 year. 60,000 into 10%, that is 6,000, right?
Yes.
6,000. So totally 10,000. 10,000 depreciation for the year 2008. See here, by depreciation account 10,000. So now you have to find out the total, that is 4 lakhs, sorry, 1,03,500 minus these amounts 6,000, 10,500, 10,000. So what is the closing balance of your assets value is 77,000. That's all. This is the straight line method. Depreciation accounting, definitely one question will be given in the examination point of view, either in 6 marks or 10 marks. For calculation of either any method they may ask, straight line method or diminishing balance method or annuity method. Any one method, definitely one problem will be given. Okay.
Ma'am, I have another question, please.
Yes.
So had there been a profit, it would have come on the debit side, right? Because it's a loss, we've given it a credit entry.
Yes. If it is profit, in debit side you have to write to profit and loss account. Profit you have to write it here.
Thank you.
Thank you. Then next one, diminishing balance method or written down value method or reducing balance method. Names are different, same. All the things are same. Okay. Diminishing balance method or reducing balance method or written down value method. So in this case, how to calculate depreciation? Simply percentage will be given, amount of the asset multiplied by 10% for first year. Second year depreciation you have to calculate only on the book value. Book value means what? Cost minus first year depreciation. That is the book value. Second year you have to calculate on that. Third year, second year book value. That is first year minus depreciation. Second year depreciation. That is the book value. You have to calculate third year depreciation. Likewise. Only that is the difference between straight line. Straight line method, the amount of depreciation will be the same for every year. But under diminishing balance method, the amount of depreciation will be reducing year after year, will be reducing. You have to calculate depreciation only on the book value, right? The same problem under what we have calculated under straight line method, the same problem let us do under diminishing balance method. You will understand what is the difference between these two methods. That is why the same problem I have calculated here. Okay. So now first year you have to write to bank account purchases 60,000 to second machinery on 1/10/2006 to bank account 40,000. These are the transactions are same. Only the amount of depreciation will be different. Okay. So see here, second year 2006. Same, first year will be the same amount of depreciation under both the method. 60,000 into 10% into 9 months, that is 4,500. 40,000 into 10% for 3 months, that is 1,000. 5,500. First year will be the same, no issue. So what is the book value? 94,500 for first year. Okay. Second year, you are purchasing third machinery, 1/7/2007 to bank account, that is purchases, 20,000. So let us calculate this depreciation. How to calculate this depreciation? See here, 94,000 book value. You have to calculate only on book value. You take this is the book value. 94,500 is the book value. You can straight away calculate on this, or each and every, say for an example, first machinery 60,000 minus how much depreciation we have calculated, 4,500. So 60,000 minus 4,500, 55,500 into 10%. Likewise, you have to calculate. or simply you can calculate on the total book value. It is easy for the calculation. Okay, so 94,500 into 10%. How much it is?
9,450.
9,450.
9,450. Okay, 9,450. For second machinery, third machinery, 20,000 into 10% for 6 months, 1,000. Right? 20,000 into 10% into 6 by 12, 1,000. So total depreciation for the 2007, 10,450. Here, I did some mistake. 10,450, right? This is 450, correct?
Yes.
Yes, 10,450. So now what is the balance? 1,14,500 minus 10,450. So how much will come?
94,000.
1,04,050, right? Correct?
Whether calculator allowed, madam?
Allowed.
Yeah, thank you.
So 1,04,000, is it correct? 14,500.
Correct, ma'am.
Correct.
Correct, ma'am.
So now, as third year, as usual, we have to dispose the 1/3 of the machinery. So for disposing the 1/3 of the machinery, you see how to calculate. Cost of the machinery for the first 1/3 of the machinery is 20,000, right? So 10% depreciation for 2006, that is for 9 months, 1,500. For depreciation for second year, 2007, how much it is? 18. The book value, you have to calculate depreciation only on book value. First year, 20,000 minus 1,500. Book value is 18,500 into 10%. 1,850 is the second year depreciation for disposing of 1/3 machinery value. Okay. So what is the book value? 20,000 minus 1,500 minus 1,850. So what is the book value? Cost of the machinery as on 1/1/2008, not 1/4. 1/1/2008, right? 1/1/2008. 1/1/2008. Okay. So how much it is? 16,650 is the book value. You are selling for only 6,000. So what is the loss on sale of machinery? 10,650. See here, 10 by profit and loss account, 10,650. You have to write it here. By bank account, sale of disposing of that asset, 6,000. Okay. Now we have to calculate depreciation for remaining assets for the year 2008. So let us calculate individually. First machinery, that is only 2/3 machinery, not 1/3 machinery. 1/3 disposed of. Okay. So 2/3 machinery, how we have to calculate? 40,000. Either you can calculate year by year, or you can take the total book value. Right here, 60,000 minus book value. Okay, 60,000 minus first year depreciation we have calculated 4,500. Book value is 55,500. Second year depreciation 5,550 we have calculated. No. here instead of that, second year book value 60,000, 40,000 you take. Okay. $40,000 minus how much will be the first year depreciation? First year depreciation is for 2/3 machinery. 2/3 machinery.
4,500.
No, 4,500 for whole machinery 4,000. 2/3 machinery is one third machinery is 1,500. So 2/3 machinery is 3,000. Okay, 3,000. Deduct it. So what is the book value? 37,000. Okay, so 37,000 minus second year depreciation 3,700. 10%, just you calculate. So 3,700, that means
33,300.
33,300, that is the book value. Now it will be clear. Okay.
Yes.
So 40,000, 2/3 machinery you take. 40,000, first year depreciation, that is totally it is 4,500. So first 1/3 machinery is 1,500. So what for 2/3 machinery, 3,000 first year depreciation. Okay. You understand this? Second year depreciation will be calculated only on this book value. 37,000 minus into 10%, that is 3,700. So third year book value is 33,300. Okay. So 10% for third year 3,330 for first machinery. Okay. Second machinery 40,000 you have purchased for first year. Depreciation 1,000 rupees. So book value is 39,000. 10% means 3,900. Book value for the second machinery is 35,100 into 10%, 3,510. Third machinery, 20,000 for you have calculated in the 2007. See here, third machinery 20,000 you have calculated depreciation for 2007, 1,000 rupees. See here, 1,000 rupees. So minus 20,000 minus 1,000, book value is 19,000. That is 1,900. 10%, 1,900. So total depreciation is
70%.
8,750 is correct? Huh? No, 8. Correct. 8,740. You can calculate like this, or simply you take the book value. Book value, that is 1,04,050 is there, no? Simply I tell you how to calculate. Book value 1,04,050. 1,04,050 minus value of the disposing asset. Value of the disposing asset book value of the disposing asset is how much? 16,650. That you deduct it. 16,650. So how much now you calculate and tell me?
87,500, ma'am.
87,500.
500.
One second. Huh? You can use calculator and tell me. 1,04,050 minus
87,400.
16,650. 84,400.
Yes, ma'am.
87,400.
87,400
Yes, ma'am. Yes, ma'am.
into 10% depreciation is equal to how much? 8,740. Instead of calculating these many steps, simple calculation. You understand this now? Is it easy?
Yes, ma'am.
This is the step by step for your understanding. I have calculated, ma. This is simple calculation, right? Generally, under diminishing balance method, you take this book value. This is book value for 3 machinery, right? So you have to eliminate only the disposing asset book value. So disposing asset book value already we have calculated, that is 16,650. If you eliminate that and calculate 10%, it is very simple, right? Do you understand or not? Which method is easy for you?
Diminishing.
No. Calculation of the step-by-step individual machinery, or you can take the book value. This is
Book value.
this is very simple and
Value is easiest, ma'am.
yes. This is for your understanding. I have made it step by step. Okay. This is the if you calculate, this is enough. Okay. So depreciation under diminishing balance method, for depreciation for 3 machinery for 3rd year 8,740. So you have to calculate what is the book value of the. Somebody mute your mic. Noise is there. By balance, how much it is? 78,610. This is under diminishing balance method. Let us see the straight line method. What is the book value? We have got it. 77,000. Under straight line method, the book value of the asset 77,000. Under diminishing balance method, the book value of the asset is 78,610. That is the answer. Do you understand this? Do you understand?
Yes, so there was a loss in this transaction also, right?
Yes, both are same. No, same problem. Loss on sale of machinery.
Ma'am, actually, they are both those are same problem.
Same
Why the value changes?
Because that depreciation we have calculated under straight line method in that problem. This is under diminishing balance method. Or it
No, ma'am. But in reality, which was the true value?
No, which method you are following, that is the true value. If your company, some company may follow straight line method. Some company may follow written down value method. Some company may follow diminishing balance method, annuity method. So which method you are following, you have to do. You have to follow the same. Okay.
Okay, ma'am. Okay, thank you.
You understand this? Can we go next one?
Yes, madam.
Madam, in the textbooks that you have sent, the method used is, they have described it differently. So, how will we learn, ma'am?
There are a lot of textbooks are available, ma. Lot of textbooks. Even internet, if you put it depreciation, final accounts, everything, it is there available. It is ready-made material available. And moreover, I will, whatever, if you want any other material, if I have, I will send you. Right? You send to my mail, I will send you. Don't worry. But textbooks, lot of accounts textbooks are available.
Ma'am, your voice.
Huh? Yes.
Ma'am, one confusion, ma'am.
Now,
which book we need to follow, ma'am? As per the explanation yours.
This is the basic things. This is basic things. It will be the same. Some foreign authors, the method will be differently. They may have, instead of trading profit and loss account, they may return income and expense.
Madam, whether we follow this book or your textbook.
No, you can follow any book, no problem. This is final accounts. This is the method.
Okay.
This is the easy understanding and this is the basic methods. Okay.
Madam, kindly please share your mail ID at the end of the session, madam.
Yes, at the end of the class I will share my mail ID. Don't worry. Whatever materials with me, I will give you. Okay.
Okay. Whether it was uploaded in the website, it is easy to everybody.
Ah.
Okay.
Okay.
Thank you.
Then next, I have practiced some more problem also. You can practice it later on. Let us go to annuity method. Second problem also I have calculated here. See here under written down value method. Third, let us see annuity method. Annuity method means some annuity table value. Capital expenditure, that is interest. Interest you have to calculate under annuity table. You have to calculate 5-year depreciation, means you have to see the table value, some value will be given. So your purchase of the cost of the machinery into that table value, if you have calculated, that is the amount of depreciation. That is the annuity method. So annuity method journal entry, this is at the time of charging interest. You have to calculate interest. So entry is asset account data to interest account. Charging depreciation, same. Depreciation account data to asset account or provision for depreciation account. Either you can credit the asset account or provision for depreciation account. You are providing provision. That means you are providing a fund to allocate the purchase of replacement of your asset under this annuity method. Next, this depreciation you have to transfer to profit and loss account. That is profit and loss account data to depreciation account. So transfer interest also to be transferred to profit and loss account. The entry is interest account data to profit and loss account. This is the journal entry. This is the 3 ledger accounts you have to prepare under annuity method. That is profit and loss account, lease account. The generally annuity method we used to calculate for leasing. Leasing business, right? So lease account, lease or plant and machinery, whatever it is, right? So these are the method. Journal I have given, the same thing ledger we have prepared. Let us see one problem, this problem you will understand. A Limited purchased a 5 years lease on 1st April 2013 for rupees 5 lakhs. The asset of the value is 5 lakhs. Its life, estimated life of the period is 5 years. You have purchased on 1st April 2013. It is decided to write off depreciation on lease using the annuity method. The rate of interest is presumed to be 6% per annum. The annuity for rupees 1 for 5 years at 6% interest. That is, if you see the annuity table, 5 years, one column will be there. Rate of interest, one column will be there. So you will get this table value. If some table value sometimes will be given in the problem itself. If it is given, no issue. If it is not given, in the examination hall, you have to ask statistical table, annuity table. You have to locate the interest factor and the year, life of the year. So you will get this table value, interest depreciation value. Okay. So this amount, you have how to calculate amount of depreciation, estimated life 5 lakhs, asset cost of the asset into this annuity table value. Amount of depreciation is this much. Okay, this will be the common to the same for every year. So 5 years you have to prepare ledger account. Prepare, see here, prepare lease account and profit and loss account for 5 years. So if you have to prepare profit and loss account, what is the journal entry here? For charging depreciation account data to asset account, and it is transferred to profit and loss account, right? Profit and loss account data to depreciation. So debit side, profit and loss account debit side to depreciation account, the amount of depreciation you have to write, right? Interest you have to, what is the account journal entry? Asset account data to interest account. Then you have to transfer this interest to profit and loss account, because this interest we are treating it as expenses or income. Income. So income you have to be credited on the profit and loss account. So interest account data to profit and loss account. So profit and loss account credit side by interest. You are investing. That means what? This depreciation amount where you are allocating, you are investing somewhere that you are getting interest. Okay. So this is how to calculate.
And some noise issue.
Please move for mic. Somebody is
Vanita.
Yes,
Who is Vanita?
This interest you have to calculate. What is the interest rate of interest is 6% per annum. 6% per annum, 5 lakhs into 6% for first year. How much it is? 5 lakhs into
30,000.
30,000 you have to transfer it to profit and loss account by interest account 30,000. Second year you have to deduct first year depreciation amount. After that you have to calculate interest. Okay. Second year 5 lakhs minus 1,18,698 into 6%. 5 lakhs minus 1,18,698 into 6 by 100. Correct? 22,878. You make it round figure, but wait. I have calculated wrong. 1,18,698, right? Oh, you have to add interest account also. See here. Second year interest, how to calculate? See the lease account. First to 2013-14. Your accounting period is 1st April to 31st March. Okay. So 1st April to 31st March to bank account 5 lakhs. So at the end of the 31st March 2014, you are investing interest. So 5 lakhs into 6%, that is 30,000. So totally 5 lakhs 30,000 by depreciation. The balance amount 4 lakhs 11,302. You have to calculate depreciation. Okay.
Ma'am, for interest also we need to calculate for depreciation.
Yes, no. Interest you are adding, that is adding in your account. Okay, you are investing somewhere. So you have to calculate interest from that amount. Okay. So this totally 5 lakhs you have purchased. Interest 6% on 5 lakhs, that is 30,000. So totally 5 lakhs 30,000. You calculate depreciation that you are eliminating, deduct it. In the balance asset value, your lease account value will be, book value of the lease account is 4 lakhs 11,302. You calculate the interest on that amount. Okay, so second year
interest only will differ, but our depreciation will be constant, right, ma'am?
Depreciation constant. Amount of depreciation is constant. Only interest amount will be different. Why? Because when you are reducing your depreciation, interest you have to calculate only on that book value. Okay.
Okay, ma'am. Thanks.
So likewise, you have to calculate for 5 years. That's all. Very simple. Annuity method is very, very simple. Right?
Ma'am, can you show the depreciation table that you have said in examination hall?
This is the table value, annuity table. If
it was not given, you have said to verify the table book. No, ma'am.
Yes, table book I will give you. It is if you put it in Google, annuity table value 5 years into 6%, you see the table value.
Okay, ma'am. I will.
It is available in the Google itself.
Okay.
In book we are having, ma'am.
Yes, we have book backside. Annuity table value will be there.
Yes, ma'am.
Okay.
So are we expected to know this by heart, the annuity table value?
No need to by heart. Why to by heart? In examination hall, if sometimes mostly they used to give in the problem itself, in the question paper itself. If it is not given, you ask your examination center annuity table we require, they will supply. Okay. Don't
Great.
worry.
Another question, ma'am. Do we have to round it off to the closest 1 rupee? The annuity value?
Yes. You can round off. No issue. You can round off.
Okay, thank you.
If it is comes in fractional, you can round off. Even this also you can round off. 698 also you can round off as 700.
700. Oh,
But what is the thing? No, 700, if you make it round off, it will not disclose your 5 lakhs. It will be beyond 5 lakhs, no? You are making round of 700. So 2 rupees will be 10 rupees will be more, greater. Right? If it is fractional value, make it round off, no issue. Okay, can we go for next one? We have very short time, that's why I am running. Within
yes,
this
ma'am.
8 hours, we have to complete total syllabus. Actually, we in regular classes, we used to take every chapters months together. Final accounts and all 3 months we used to take. This depreciation we can take within 1 week, 10 days, no problem. But each and everything require more time. But distance education, we have only short period. Within 8 hours, we have to teach all the methods. You should have all the knowledges. That's why I'm running and then speaking very fastly also. Oh, sorry for that. Can we go for next one?
When will be the exam, ma'am?
Yes, ma'am.
Exam generally December and June will be conducted yearly twice.
Okay, ma'am.
Next one, next chapter, ratio analysis. What is ratio? Ratio means what? Relationship between, arithmetical relationship between two numbers.
Two
Isn't
numbers.
it? Ratio
Yes, ma'am.
means that is correlation between two accounts. That is what is the relationship between asset and liability? What is the relationship between debt and equity? What is the relationship between liquidity? Like that. Okay. So in final accounts, you are interpreting only trade. What is the profit earned by the company or loss incurred by the company? What is the financial position of the company? Financial position. What is the asset value? What is the liabilities value? That is the only interpretation you are giving under financial accounting. Okay. As a decision making, as a manager, you have to take various decision making. Not only manager, and then all stakeholders. If you are an investor, you have to think of whether the company share prices will go up or not. What is the financial status of the company? So you want to know, right? So for that, we need some techniques to interpret the financial statements. Ratio analysis is nothing but the interpretation of financial statements to take decision making in all aspects. Generally, we used to classify the financial final statements under 4 category of ratios. That is liquidity. What is the liquidity position of the company? What is the efficiency of the company? What is the profitability of the company? What is the long-term
Balance sheet.
Yes, balance sheet, long-term sufficiency of the company. So these are the things we have to analyze, right? So these are theories also I have given. You go through that, you can understand. Let us do maximum problems. I will explain you. That will be useful for your theories and all. You go through it, and sometimes theories also they may ask, what are the objectives of ratio analysis? What are the limitations of ratio analysis? What is the uses, like that? Okay, that is why I have given it in lab PPT. Let us go to the problem, because we have lot of ratios are there. All the ratios I have given, explained, and formulas. See here, all the formulas I have given here. Straight away I go to the problem how to calculate it, because each and every ratios, if I take to explain, it will take more time. Months together it is required. Ratio analysis and all, at least 2 months are required to explain each and every ratios and all these things, right? So instead of that, I have given notes here in this PPT, and then straight away I will go for the examination point of view problems. Okay. But basically, I will explain you what are the ratios you have to study, right? All these ratios we can classify under 4 headings. That is liquidity ratio, See here. Right. See here. Uh, types of ratios are liquidity ratio, leverage ratio, activity ratio, profitability ratio, coverage ratio, right? Liquidity ratio means short-term liquidity, whether the current assets are sufficient to pay off your current liability. That is called liquidity ratio. Under liquidity ratio, we used to calculate current ratio, quick ratio, acid test, quick ratio or acid test ratio, or absolute liquid ratio. These three formulas we used to calculate under liquidity ratio. Leverage ratio, let us see one by one. See here, liquidity ratio. Liquidity means quickly converted into cash. What are the assets are quickly converted into cash? That is called liquidity ratio. Under that three ratios we can calculate: current ratio, quick ratio, and absolute liquid ratio. Current ratio means current asset divided by current liability. The formula is current ratio is current assets divided by current liabilities, right? Current assets, what are the current assets? Cash in hand, cash at bank, stock, debtors, bills, receivables, all these things are current assets. Current liabilities, current creditors, bills, payables, bank overdraft, short-term loans. These are all current liability. Then now outstanding expenses are current liability. Prepaid expenses are current asset. So you have to calculate our accounting norms. If you have 2 times of your current asset, you can pay off your 1 time of your current liability. So that is the ideal current ratio. Ideal current ratio is 2:1. Okay. Quick ratio is 1:1. That is ideal quick ratio. Quick ratio is nothing but quick asset divided by current liability or quick liability. Only one difference. Quick asset, what is the difference between current asset and quick asset? Only stock. If you eliminate stock from the current asset, that is called quick asset. That is, quick asset means what? Easily, quickly converted into cash. The assets which are quickly converted into cash, that is called quick asset. So if you eliminate stock, that is all the other items are quick asset. What is quick liability? Quick liability means if you eliminate bank overdraft from the current liability, that is called quick liability. Do you understand this? So quick asset means eliminate all current asset minus stock and prepaid expenses. Quick liability means all current liability minus bank overdraft and cash credit. So if you have 1 time current asset, that is sufficient to pay off your current liability. That is quick liability, right? So 1:1. Absolute quick ratio, that means cash, only cash, bank balance, marketable securities divided by current liabilities. In that case, if you have 0.5:1, that is the ideal absolute liquid ratio. I have given everything, right? Next one, activity ratio. So activity ratio means turnover ratio. Activity is nothing but turnover ratio, or we can say as it is a measurement of efficiency ratio, management efficiency of in terms of how much times required to collect your debt capital. I mean debtors, from your debtors. How much times taken to pay off your creditors. That is called debtors turnover ratio, creditors turnover ratio. And then what is the efficiency of stock? How many times your stock is converted into sales? So that is why turnover, so stock turnover ratio, working capital ratio. These are all efficiency ratio or activity ratio. Okay. See here, I have given formulas, everything. Stock turnover ratio is cost of goods sold divided by average stock. Cost of goods sold is nothing but sales minus gross profit. That is called cost of goods sold. Okay, I have explained everything. Debtors turnover ratio is credit sales divided by average debtor. So average debtor, that is average debtor means opening debtor plus closing debtor divided by 2. That is the average debtor, or closing debtor you can take. Depends upon the problem you have to take. Opening as well as closing, if it is given, you have to take average. Only closing is there, you take closing. Credit sales, cashiers you should not take. Only credit sales you have to take. Right? Similarly, creditors turnover ratio, working capital turnover ratio. These are all activity ratio or efficiency ratio. The next one is profitability ratio. Profitability ratio, under that gross profit ratio, operating ratio, net profit ratio, return on capital employed, earnings per share. These are all profitability ratios. Profitability ratio formulas: gross profit divided by sales into 100. Operating ratio is cost of goods sold or plus operating expenses divided by net sales into 100. Net profit ratio, net profit divided by net sales into 100. The formulas I have given here, right? Then next one, solvency ratio. Solvency ratio means that is long-term solvency. Whether your company is sufficient fund to pay off your debt capital. That is the that is called as long-term solvency ratio. That is debt equity ratio, debt ratio, proprietary ratio, interest coverage ratio. These are the ratios comes under solvency ratios. Okay. Formulas I have given, you read it. Let us do some problems, then only you can understand our examination point of view. Okay. See this problem. Sometimes balance sheet or trading profit and loss account will be given. You are required to calculate some formulas. That is, calculate current ratio, calculate debt equity ratio, like that. Sometimes the ratios will be given in the problem. You are required to prepare balance sheet. Like that also will be given. Two types of method of problems will be given. See this problem. Balance sheet is given. You are required to calculate the liquid ratio, debt equity ratio, solvency ratio, stock of working capital ratio are given. If you know the formula, then only you can do this sum, right? So liquid ratio, what is the formula? Liquid asset divided by liquid liability or current liability, right? So what are the liquid asset? See the current asset side here: stock, debtors and cash. Stock is a current asset, not a liquid asset. So you have to take only these two, debtors and cash. Debtors 2 lakhs, cash 1 lakh. See here, creditors, current liabilities means that is overdraft and creditors. If you take liquid liability, only creditor 2 lakh. Okay, so what is the ratio? Liquid asset divided by liquid liability. Liquid asset is 3 lakhs divided by liquid liability is 2 lakhs. So 1.5 times, right? So this is the answer. You have to do like this. The next question, what they are asking? Debt to equity ratio. What is debt to equity ratio formula? Debt means external equity or long-term debt. Debentures, bond, long-term debt, that is called external equities. External equities, you can add current liability also. That is total external equity. You have to liable to pay to your current liability also, no? So you have to take total long-term as well as short-term liabilities. That is why external equity divided by internal equity. Internal equity means you have to take a shareholders net worth. Shareholders net worth means what? See here, equity share capital plus reserve fund. These two are shareholders fund. Any reserve, equity share capital plus reserves, any reserves if it is there, you have to add. That is called shareholders net worth or internal equity. External equity means here debentures, overdraft, creditor. These are all external equity or debt. Debt equity. Debt is this much, 6 lakhs. Equity is 16 lakhs. Okay. See here. 66 lakh debt by equity. Debt is 6 lakhs divided by 16 lakhs. So 0.375 times. 1 second. Hello? Ama. Time aicha. So debt to equity ratio is 0.375 times. Next is solvency ratio. Solvency ratio, they have asked. Solvency ratio, stock of working capital ratio. See here, solvency ratio formula: outside liabilities or external equities divided by total assets. Solvency means whether external equity is sufficient, our total asset is sufficient to pay off your external liability. That is called solvency ratio. Your external liabilities already we have calculated, that is 6 lakhs divided by total asset. Total asset is 22 lakhs. So what is the solvency ratio is 27.27 percentage. That is the solvency ratio. Next one is stock of working capital ratio they have asked. Stock of working capital ratio means stock divided by working capital. What is working capital means what? Current assets minus current liabilities. That is working capital. So current assets minus current asset is total current asset is stock, debtor, cash. These three if you add, that is called current asset. 8 lakhs. Minus current liability is overdraft and creditor, that is current liability. 3 lakhs. Okay, 8 lakhs minus 3 lakhs. Working capital is 5 lakhs. So what is the formula? Stock is how much? 5 lakhs. So 5 lakhs stock divided by working capital. So 5 lakhs divided by 5 lakhs into 100, that is 100%. Stock of working capital is 100%. Only these are the questions are given, right? See this problem. Calculate current ratio, quick ratio, cash ratio, and net working capital ratio. The informations are given. You have to use the formula and calculate. Okay. I will go for the next one, next model. See this problem. This is important. Calculate the amount of current asset and current liabilities. Current ratio 2.5 and working capital is 60,000. This problem is very, very important. 6 marks question or 10 marks question they may ask you. See here, only the informations are given ratio, right? Current ratio are given. Working capital information only is given. You are required to calculate what is the amount of current asset, what is the amount of current liability, that you have to calculate, right? So how to calculate? Working capital means what? Current asset minus current liability is the working capital. Okay, so current asset we do not know, current liability we do not know, but what is the ratio? Current ratio means what? Current asset divided by current liability, isn't it? If current asset divided by current liability means what? If you have 2.5 times of current asset, your current liability is 1 time, isn't it? Do you understand or not? What is working capital? Working capital means current asset minus current liability. Current ratio is given. What is current ratio? 2.5. 2.5. That means what? 2.5 times of current asset. 1 time of current liability. That is 2.5 by 1. That is current asset is 2.5. Current liability is 1. So now working capital is 60,000 is equal to 2.5 minus this 1 time. So how much x? Take it as x. Current asset we do not know. Take it as x. So what is x? 60,000 is equal to 1.5x. So current asset you can take 60,000. If you calculate, see here, 60,000 into 1. Sorry, divided by, if you take 60,000 x, if you take this side, 60,000 divided by 1.5. So x is 40,000. 40,000. Do you understand this one? So now current asset is, current liability is 40,000. Why? X means what? 1 time. So your current liability is 40,000. What is your current asset? 2.5 times. So 40,000 into 2.5 times. So current asset is 1 lakh. Current liability is 40,000. Do you understand this?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Right? This kind of small problems will be given for 6 marks and 10 marks questions. Okay. Even sometimes more answers will be given. You are required to prepare proprietary fund statement or balance sheet. That will be, sometimes they may ask you in 20 marks case study also. So you have to practice many problems. Okay. And let us do some problems like this. See next problem. Debtors turnover ratio and average collection period. This kind of problem will be given for 10 marks question. Right? Total sales are given 4 lakhs. Cash sales 20% of total sales are given. Opening debtor 1/1/2004 debtor are given 40,000. 31/12/2004 closing debtor given 1,20,000. So you are required to calculate informations are given. This is very simple. You have to apply the formula and calculate what is debtors turnover ratio and average collection period. So formula for debtors turnover ratio, what is the formula? Debtors turnover ratio is equal to credit sales divided by average debtors. Credit sales means here total sales 4 lakhs given, cash sales 20% given. So what is credit sales? 4 lakhs into 80% is the credit sales.
Yes,
Right?
ma'am.
Yes or no?
Yes, ma'am.
So
Yes,
3
ma'am.
lakhs, 4 lakhs into 80% means credit sales is
Three-
3 lakhs
20,000.
20,000 divided by what is the average debtor? Average debtor means opening debtor plus closing debtor divided by 2. That is average debtor. 40,000 plus 1,20,000 divided by 2. So what is the average?
80,000.
80,000.
So debtors turnover ratio is 3,20,000 divided by 80,000, that is 4 times.
4 times.
Debtors turnover ratio is 4 times. Then next question they have asked you, average collection period. Average collection period means how many days or months required to collect cash from your debtor. That is the meaning. Okay. So formula for average collection period is number of days or months in the year divided by debtors turnover ratio. Okay. Number of days, let us assume 365 days in a year or 12 months in the year, right? So divided by number of days or months in the year divided by debtors turnover ratio. Debtors turnover ratio we have already calculated, that is 4 times.
4
So
times.
you have calculator, if you take 365 days divided by 4 or 12 months divided by 4. So if you take in terms of days, 91 days or 3 months, that is the average collection period. Okay. This is very simple one. Similarly, creditors turnover ratio. Creditors turnover ratio means what? Credit purchases, right? Credit purchases divided by average creditor. So in this problem, credit purchases are given 12 lakhs. Bill creditors plus bills payable 4 lakhs. That is opening accounts payable. We can say it as accounts payable 4 lakhs. Closing accounts payable it is 2 lakhs. So average is 4 plus 2, 6 by 2. So 3 lakhs, right? So here credit purchases 12 lakhs. So 12 lakhs divided by 3 lakhs. Creditors turnover ratio is 4 times, right? So similarly, average, not collection period, average payment period. Debtors only collection period. The creditors you have to pay. Average payment period. Average payment period is number of days in the year or months in the year divided by creditors turnover ratio. See 365 days or 12 months divided by your creditors turnover ratio is 4 times. Already we have calculated. So 91 days or 3 months. Okay. Do you understand this? Then next problem, stock, calculate stock turnover ratio. Stock turnover ratio, that is opening stock is given, closing stock given, wages, sales, purchases, carriage, inwards are given. So what is the formula for stock turnover ratio? Net sales or cost of goods sold divided by average inventory, right? Divided by average inventory. It's going next. Okay. Stock turnover ratio is equal to net sales or credit cost of goods. Generally, stock when you are taking, you have to take only cost of sales or cost of goods sold. Okay, cost of sales here problem it is given. Sales are given 80,000. Wages 14,000, purchases 46,000. Here, don't take net sales. Cost of goods sold you have to take. Okay. So how will you take cost of goods sold? Wait.
Sales minus gross profit.
Yes, sales minus. No, this side. Just you imagine trading account. Trading account credit side, sales plus closing stock will be there, right? So credit side will be 1,02,000, right? Keep it this one side. Another side purchases minus purchases 46,000 minus debit side of trading account 46,000 plus opening stock 18,000 plus wages 14,000 plus carriage inwards 4,000. So total this how much comes? 50, 68, 78, 82,000. So gross profit be 20,000. Okay. Generally, how we used to take sales minus gross profit is cost of goods sold. Or here you can take the debit side total. Right? This one you leave it. Debit side that is purchases plus wages plus opening stock plus carriage inwards. These are all cost of goods sold. 82,000. Here don't take 80,000, take 82,000. Average inventory is opening stock plus closing stock divided by 2. 18,000 plus 22,000 divided by 2, that is 20,000. 82,000 divided by 20,000, 4 point. How much comes?
4.1.
4 point?
1.
4 point something, no?
4.1, ma'am.
1. Okay. Generally, we should not take net sales. Sales include profit, no? So you have to take only cost of sales or cost of goods sold. That means sales minus gross profit you have to eliminate, right? That is the correct way. Next one, see this problem. Calculation of stock turnover ratio. Sales 4 lakhs given, gross profit ratio are given. Opening stock, closing stock. So what is the formula for stock turnover ratio? Net sales or cost of goods sold. See here, gross profit ratio are given. So sales minus gross profit, that is cost of goods sold. So 4 lakhs, you don't, while giving profit, gross profit, you have to eliminate the profit. So 40,000 means 3,60,000. See, both the method I have given. 3 lakh, this is the correct one. 3,60,000 divided by average stock. Opening stock plus closing stock divided by 2, that is average stock. This is the right method. Even cost of net sales also you can take, but generally stock, whenever you are taking stock, you have to take only the cost value. That is the correct one. This method is correct one. Okay. Next one. This is simply you can apply the formula with the informations: debtors turnover ratio, average collection period, creditors turnover ratio, stock turnover ratio, all these things. Let us do some important problems. These are also only application of turnover ratio, fixed assets turnover, working capital ratio. This one you can do it. This one also you can do it. This kind of problem, let us see. This is very, very important problem. That is, ratios will be given. You are required to find out the value. Previously, we have calculated working capital information given. You have calculated current asset and current liability value. Likewise, here you have to prepare balance sheet. Informations are given. Working capital given, bank overdraft given, fixed assets to proprietary fund ratio are given, resource and surplus, current ratio and liquid ratio are given. You have to prepare balance sheet. You have to find out all the informations, right? So first let us see what are the informations are available. Working capital are available, current ratio, liquid ratio are available. So with the help of current ratio, working capital, we can find out current assets value and current liabilities value. Okay. So working capital means current asset minus current liability is equal to 2,40,000. Current asset is current ratio 2.5 times. So 2.5 times minus 1 time 1x. 2,40,000 is equal to 2.5x into minus 1x. So what is the x value? X value is 1,60,000 is the current liability into 2.5 times current asset is 4 lakhs. Okay. Current asset is 4 lakhs, current liability is 1,60,000. Then with the help of liquid ratio, what you can find out? You can find out the stock. Difference between current asset and liquid asset is stock, right? Stock is 1.5. Liquid asset is 1.5. See here, stock value, current liability 1,60,000, right? Current liability is 1,60,000 into 1.5 times, that is 4 lakhs. Stock value, current asset is 4 lakhs, isn't it? Current asset 4 lakhs minus stock. Stock we do not know. Liquid ratio is 1.5. 1,60,000 is current liability. So current liability 1.5 into 1,60,000 is equal to 4 lakhs minus stock. Stock, if you bring this side, 4 lakhs minus 2,40,000. Therefore, stock value is 1,60,000. Or sometimes overdraft, or you can ask, overdraft is given, madam, 40,000. So if you are utilizing instead of current liability, quick liability, you are eliminating bank overdraft. What to do? So in that case, we are assuming, you can write one assumption. We are assuming that current liquid ratio we have taken as current liability. Liquid asset divided by current liability we have assumed to take, right? Or if you are taking it here, liquid liability means liquid liability means here 1,60,000 is the current liability minus overdraft 40,000 you eliminate. So liquid liability is 1,20,000. Here instead of 1,60,000 you can put 1,20,000, right? 1,20,000. 1.5 into 1,20,000, how much? Liquid asset.
1,80,000.
1.5 into 1,20,000, 1,80,000. No.
2,80,000.
1.5 into 1,20,000. 1,80,000 is 1 lakh. No, current liability is okay. Liquid asset will be 1,80,000. Okay. So current asset minus liquid asset. Current asset is 4 lakhs. Liquid asset is 1,80,000. Instead of 2,40,000, it will be 1,80,000. So here stock value will be
2,20,000.
2,20,000. Yes. Even if you can calculate like this also, either this way or that way, but you have to give assumption. Liquid liability are taken or quick liability you have taken, right? So you have to write whatever you have taken, you have to write assumption, right? Then now with the help of this, we have to prepare balance sheet. Balance sheet na current asset we have, current liability we have, then we need capital and fixed assets. There is no information, but only one information is available. Fixed assets to proprietary fund ratio is 0.75. Proprietary fund means what? What is proprietary fund? Shareholders fund or shareholders net worth. Resource and surplus plus capital. That is called proprietary fund, right? So fixed assets also we do not know. Proprietary fund also we do not know. No informations are available. So how to calculate this? We have to use the equation, balance sheet equation. So balance sheet liability side, what are the things we used to take? Shareholders fund, that is capital plus resource and surplus plus long-term liability plus current liability. Long-term liability we are assuming that 0. Okay. Current liability we know is equal to asset side. What are the things? Fixed asset plus current asset, right? So fixed assets to proprietary fund ratio is given. Informations are given 0.75 times. Okay. Now let us assume long-term liability is 0. So shareholders fund, let us assume that X, right? Fixed asset is X. Fixed assets to proprietary fund ratio is 0.75. So 0.75x. Fixed asset is 0.75x. Let us assume shareholders fund is 1x. Okay. 1x is plus current liability we have already calculated 1,60,000 is equal to fixed asset is 0.75x plus current asset 4 lakhs. 4 lakhs already we have calculated, right? So here 1x, now you are solving this equation, bring this x one side the value, right? So 1x, if you bring this 0.75x, will become minus. So 1x minus 0.75x is equal to 4 lakhs, right? 4 lakhs minus 1,60,000. So 0.25x is equal to 2,40,000. 4 lakhs minus 1,60,000 is 2,40,000. What is for 1x? 2.5x is equal to 2,40,000. What for 1x? 1x is equal to 2,40,000 divided by 2.5. So X means what? Shareholders fund. 9,60,000 is the proprietary fund or shareholder fund. What is your fixed asset? 0.75x of your shareholders fund. 9,60,000 into 0.75, that is 7,20,000 is the fixed asset. Shareholder fund is 9,60,000. Now we have all the information. We can prepare balance sheet. Come to the balance sheet side. So shareholder fund totally 9,60,000. But information for resource and surplus already given 1,60,000. So eliminate that. Capital is 8 lakhs. Total shareholder fund is 9,60,000. This is share capital plus resource and surplus is called shareholder fund or proprietary fund. Okay, that is 9,60,000. Okay, then current liability. What are the items are given? Totally 1,60,000 are the current liability. So overdraft is 40,000. Totally current liability is 1,60,000. Come to the credit side, fixed assets, that is 7,20,000 we have calculated here, and then current asset totally 4 lakhs. Out of 4 lakhs, stock is 1,60,000. Remaining other current assets are 2,40,000. So your balance sheet should be tallied. Equal amount you have to get it. Do you understand this method? Do you understand this method? Any doubt? This kind of problem definitely will be given one problem either in 10 marks or 20 marks. Or if it is a small problem, may be given for 6 marks. With the available information, we have to find out the value. Okay. Let us do some more problem. You will get some more knowledge. Just few minutes. Few minutes. You just go through. I will come to it. Go through this one. This step I completed. Okay. Let us see this problem. From the following information, prepare balance sheet of ABB Limited showing the details of working. Paid up capital 50,000 are given. Plant and machinery, total sales, gross profit, annual credit sales, current ratio, investor inventory turnover ratio, fixed assets turnover ratio, sales returns, average collection period, bank credit to trade credit, cash to inventory, total debt to current liability. These are the informations are given in your problem. We have to calculate the value of all the things. Then we have to prepare balance sheet. Okay. First one, what are the informations are available? Sales, total sales are available 5 lakhs. Gross profit is given 25%. Out of that, we can find out what is the cost of goods sold. We can find out. With the help of cost of goods sold, inventory turnover ratio are given. See here, inventory turnover ratio. Inventory, with the help of inventory turnover ratio, we can find out the value of stock. Okay. So first net sales. Net sales means total sales minus sales return. So here 80% of net sales. Annual credit sales, 80% of net sales. So credit sales you have to take 5. Total sales is 5 lakhs. 80% is credit sales. Annual credit sales, 80% of net sales. 1 lakh, is there any information? Sales return is given. Yes, sales return, see here. Sales return is given 20% of sales. Sales return you have to eliminate from total sales. So 5 lakhs into 20%. Sales return, that is 5 lakhs in 5 lakhs into 20%. That is sales return. 5 lakhs into 20%. That is this. This is the 1 lakh. Sales
1 lakh.
return. Net sales is 4 lakhs. 5 lakhs minus sales return 1 lakh, 4 lakhs. Credit sales is 80% of net sales. So 4 lakhs into 80% credit sales. That is 3 lakhs 20,000. Right? So gross profit, what is given? 25%. So 25% on net sales. So net sales is 4 lakhs into 25%. Gross profit is 1 lakh. Right? What is cost of goods sold? Sales minus net sales minus gross profit. That is called cost of goods sold. So net sales is 4 lakhs. Right? 4 lakhs minus 1 lakh. That is cost of goods sold is 3 lakhs. Inventory turnover ratio, what is the formula? Cost of goods sold divided by inventory turnover. Inventory turnover, it is given 4 times. So 3 lakhs divided by 4 times. So stock value is 75,000. Right? This one, do you understand? Next one, receivable turnover ratio. Receivable turnover ratio, we have to calculate, right? See here, average collection period given 73 days. Average collection period, what is the formula? Average collection period means number of days
Number of days divided by
debtors turnover ratio, isn't it?
Yes, ma'am.
Debtors turnover ratio. Here, debtors turnover ratio we have to find out. But debt collection period is given, 73 day answer is given. Okay. So here, number of days or months in the year, 365 days divided by debtors turnover ratio is equal to 73 days.
73.
Right? So
Yes,
if you bring debtors turnover ratio this side, debtors turnover ratio is equal to 365
365 divided by 73.
divided by that 73, right? So how many
Yes, ma'am.
times? 5
5
times.
times.
Debtors turnover ratio is 5 times. With this debtors turnover ratio, we can calculate bills receivables, right? What is the formula for debtors turnover ratio? Net credit sales divided by
Receivables.
receivables, average receivable or closing receivable, right? Average or closing receivable. Here that we can find out. Answer is given. 5 we have calculated, right? So net credit sales, we know 3,20,000 is the net credit sales. 3,20,000 divided by 5 times. So receivables are how much is the receivables?
64,000.
64,000 we can take it as average or closing receivables. Okay. Similarly, average cash to inventory. Cash to inventory 1 is to 15. So if you have inventory, cash is 1 time, inventory is 15 times. So inventory already we have calculated here 75,000, right? So 75,000 cash to inventory 1 by 15. Here I did mistake. Not 1/5. 1 by 15. Here you make it correction. I couldn't do. I couldn't edit it. This is not 1 by 5. 75,000 into 15 divided by 15.
Correct.
Correct, ma'am.
Here it is wrongly written 1/5. Not it is not 1/5. Isn't it?
Yes, ma'am.
15 times. So cash is 5,000. The next one, total current assets. Total current assets. What are the informations available? Current ratio is 2 times. Inventory turnover 4 times. That already we have calculated. Current assets. What are the current assets? Inventory we know. Now inventory is 75,000. Receivable 64,000 plus cash is 5,000.
5,000.
Total current asset is 1,44,000. Similarly, now let us calculate total current liabilities. Current liabilities, that is current assets divided by current liability, is given 2 times. Current ratio 2 times. Okay. So current asset we know 1,44,000. So current liability will be 72,000. Okay. Then bank credit to trade credit, that is 2 times. So total current liability is 72,000. So two-third is bank credit, 1/3 is trade credit. Okay, so 48,000, 24,000. The next total debt. See here, total debt to current liabilities. Total
times.
debt to current liability 3 times. Right? See here. Total debt is, current liability is 72,000. Total current liability is 72,000 into 3 times. Total debt is 3 times. So 2,16,000. Now long term debt is total debt minus current liability. This is total debt minus current liability, that is long term debt is 1,44,000. Then fixed assets. What is the fixed assets? Fixed assets turnover ratio 2 times are given. Turnover means sales. Sales we know. Net sales. Fixed assets is 2 times. What is given? Fixed assets turnover ratio 2 times. Turnover means sales. So 2 times of your sales. Sales is how much is given? We have calculated.
Net sales 4 lakh.
4 lakhs. So 4 lakhs. Fixed assets 2 times. Now 1 by 2. Fixed assets by turnover. So 4 lakhs divided by 2. So 2 lakhs. Fixed assets is 2 lakhs. Then other fixed assets. Fixed assets, some, see here, plant and machinery are given 1,25,000. So total asset, fixed asset is 2 lakhs minus 1,25,000. 75,000 is other fixed asset, right? So now total asset is fixed asset 2 lakhs plus current asset 1,44,000. Current asset is 1,44,000. So total asset is 3,44,000. Next come to net worth. Net worth means what? Total assets minus
Total debt.
Or we can take capital. Net worth is nothing but capital plus reserves and surplus. That balance sheet equation. Liability side, net worth, long-term capital, and then current liability. This side, fixed assets, current asset. Okay. So total asset are equivalent to total liability. Okay. So total asset value we know here 3,44,000 we know. So liability side we know total debt. Total debt if you eliminate, that is net worth or shareholders fund. Okay. So 3,44,000 minus total debt we have calculated this 2,16,000 net worth, right? Paid up capital, see here, paid up capital given in the problem 50,000. That means total shareholders net worth 1,28,000 minus 50,000 is capital, paid up capital. Rest is resource and surplus. So we have calculated all these things. Now we have to prepare balance sheet. Balance sheet, liability side, paid up capital 50,000, resource and surplus 78,000. So total net worth is 1,44,000. Long-term debt we have calculated here 1,44,000. See here, long-term debt 1,44,000. Then bank credit and trade credit. Total current liability is 72,000, right? 72,000, 2/3 bank credit, 1/3 trade credit. You have to separate and show. Then asset side, plant and machinery 1,25,000, other fixed assets 75,000. Inventory 75,000, receivable 64,000, cash. So your balance sheet should get tallied. You understand this? This kind of problems will be given for 20 marks case study. Any other doubts?
No, ma'am.
No, ma'am.
Okay. Shall I wind up? Next class, I have second year class. You just go through this.
Ma'am, can you share this PPT to any common group, ma'am?
This PPT I have uploaded already on our DDE website. DDE website, you go to that.
Okay.
DDE website. that student
Okay.
menu, I tell you where it is.
Study materials, right, ma'am? In that section, will you upload?
In that section, PPT is there. In that accounting for manager, you can download it. The same PPT I have uploaded already. Okay.
Okay, ma'am.
Yeah, John Philip shared, I think,
Huh?
command message, the link.
Okay. Yes, I leave message. My mail ID. This is my mail ID. If anything you have, you can send mail. Okay. You can note down this mail ID.
Okay, ma'am.
Okay, thank you. I have to go for other class. Huh? I wind up this. Bye.
Bye, ma'am.
Bye, ma'am.
Thank you.
Thank you, ma'am.
Ma'am. Thank you, ma'am.
Thank you.
Thank you, ma'am.
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 Hello, good afternoon, everyone.
Good afternoon, ma'am.
Good afternoon, ma'am.
Good afternoon, madam.
Are you able to see the?
Good afternoon,
Okay,
ma'am.
good afternoon. Are you able to see the PPT?
Yes, ma'am.
Good afternoon, ma'am.
Okay, right. Shall we start the
Good
class?
afternoon.
Yes, ma'am.
Okay. Right. I think you remember where we left yesterday. We left in the planning, right? So we will start with that. Okay. Hope you don't have any doubts from yesterday's class. So I'm continuing. In between, if you have anything to ask, you can ask me, right? Okay. So today we start with the first function of any management concept. So these are, we say that we have to do 5 things in any management process. So the first process is planning, right? So let's see how the planning starts. Planning always has 2 different modes. One is long-term planning, the other one is short-term, right? In this first we are going to see the broader way of planning. We call these as vision, mission, and objective, right? What is this vision, mission, and objective? Most of you would be working in any organization. So have you ever seen your vision, mission pasted in the notice board or in your website or anywhere? Any of you have encountered vision, mission of your organization or anywhere else? Anyone?
Yes, ma'am. We noticed it.
You have noticed. Very good. In the notice board or the website. Have anyone cared enough to read through that? If it is your organization or the organization related to you in any way, if you are a stakeholder. Anyone has read?
Yes, ma'am.
Yes, ma'am.
Yes. Very
Yes,
good.
ma'am.
Can anyone say about the company and what do you remember as mission or vision?
Yeah. I'm working in Metla Toledo.
Okay.
Our vision is like we work for one team, global reach, and amazing solutions. That's the vision of the organization.
Very good. Then,
And
do you
if
have
we
any?
are- Yeah, and if we are part of it and we are making the difference precisely.
Very
That's
good. Very good. Just hold on 1 second. Sorry for that. Okay. So thank you, Harini, I think. Thank you for that. Okay. So anybody else can say your company or any other thing. It's just one liner, a vision or mission. So just I'm very happy that you had time to read that. Usually people will just pass it out. If it is pasted in big letters also, usually we don't give that much time or care to read it out. I'm very happy that somebody has read it. Somebody else? Anyone else?
Ma'am, I am working in small company, ma'am, IT company. I'm working as a software tester.
Very good.
My company motto is make your digital journey intelligent and autonomous.
Very good. Very good. Okay. That is your vision, right?
Yes, ma'am.
Yeah, okay. It is like a mission. More than a vision, it is like a mission. Okay. Very good. Right. This is like a motto. Okay. Right. You are having some sort of, what do you say, a path to go to. Very good. Why I ask the question, often we go through this. Most of the companies has this plates. They'll put it in bigger plates or they'll paint it, or in the website you can see this. But most of the time, we don't give importance to that. But who makes this and why we need this? See, actually, you need some kind of, motivation, or you need some kind of destination. Because see, if you take in a larger philosophy also, if you take it, if you think that life is a journey, we need something, some place that we know where we are going. Then only you know how we can go, when we will be arriving. All these things will come. So you need that part where you are supposed to reach, right? So that kind of ambition, these things give. The difference between these three: vision, mission, and objective. Oh, somebody is asking the subject title. I'm very sorry that I didn't realize that maybe newcomers would be there today. We were just continuing yesterday's class. Okay, let me introduce once again the subject and myself. I am Dr. Punita. I am faculty of DDE, and now we are looking at management concepts and organizational behavior paper. Is it okay? Actually, yesterday we have started and almost we have finished the introduction also yesterday. We are continuing with that. So we are in the first step of any process of the management. We have 5 steps: actually planning, organizing, directing, controlling, and monitoring. So we are in the first one. We are going to see now what is planning, right? We are in that part. Okay. I think now we can continue. So where are we? Right. As I told you. But usually when I ask, you are not able to differentiate these three. What is a vision, what is a mission, and what is an objective, and why we need to have all the three. That's why I told you in the starting itself. Planning is 2 types. One is long term and another one is short term. Okay. The long term takes care of, say for example, 10 years, 15 years. It's depending on the company. And usually the short term planning will be for 1 year, 6 months to 1 year, 2 year, right? So this mission, vision, objective is about the time period, right? Nothing else. So practically the vision is the longest one, right? Say what I visualize my company to be in another 15 years, 20 years. That is my vision, right? What is a vision usually? What you can see, foresee after a long time, right? So this gives a purpose. What I would like to be after a long time. So based on that vision, I can make a mission. Say for example, after 10 years, I want my company to have a brand name, a unique place, or say place. I want my company to be number 1. So what I will do, I will have a mission to accomplish the first step, right? So what I will do, if I take, let's take example. My vision is to make my company a particular brand, unique brand in 10 years. So my mission would be, first take the region, any particular region, or my mission could be reach a particular amount in sales, or my mission could be have a particular amount of a number of consumers. Are you able to understand? Or my mission could be even to reach an amount. So first step to reach the vision, right? So once the mission is over for 3 years, I can put on the next mission. Mission changes until I reach the vision. Okay. So if you take a mission is for 3 years, then the objective of the company will be further split into 3. I can make it for 3 years. Say for example, the mission is to reach a certain amount of customers and to sell certain amount of units. Then I can make the objective as the first year objective. Produce this much so that I can sell this much. Are you able to understand? So it is further split up. So the second year would be reach the sales. Third year would be reach the customers. Then you can change the mission. You can further split up 3 more objectives. Are you able to understand? So it starts with vision, not objective. The objective may be small, but it has to start with vision. You make a vision first, make the mission second, and keep an objective which is achievable. That is very important. Are able to get the point? Any organization which has a leader who is sensible enough to make an achievable vision, mission, and objective will be a success. There is no question in that. It seems very easy to be like, see, as I told you yesterday, the top management will be only policy making. They need not get into the field. But the policy making is the toughest thing to run the company. So that is where this comes. The top management's eligibility, competency to run the organization will clearly show if you make a proper vision, mission, and objective. If you read that vision, mission, and objective, if you are a management savvy, you can easily say how the top management is. It's like, you say that, you tell me the books you read, I will know about you, or tell me the friends you have, I'll know about. Same way. You give me the vision, mission, and objective, I can give you about the top management, how competent they are able to understand. So that much importance these things have. This is like the driving force for all the people who are following below them. See, if you clearly give them the path where to go, they will run. But if it is vague, they don't know what to do, where to go, and there is no proper leader, they cannot even walk. Okay? So a good organization is where the clarity is there, where the people have the planning properly, where they have to start, where they have to end, and when they have to end. Are able to understand? So these three goals or these three planning steps will give you enough of the information to start your journey in an organization. And this planning process is a continuous one. As I told you, you are making short-term and long-term. Once it is achieved, you are going for the next step. So it is flexible, it is continuous. Are you able to understand? So we go to the next one. These are a little bit complex, and actually I am comprising all these things into nutshell. These things are very big actually. Okay. So if you feel that you are not able to follow or you need more clarity, kindly ask. So I'm trying to make it into as brisk as possible. Okay. Right. So this is what I have told you about vision, long run objective. Like I've given one example. See, to achieve globally 50 branches, I need to have 50 branches all out the globe. So that would be the vision. Okay. Say for example, in 10 years. Okay. So I cannot divide such that 50 branches. So every year I can have 5 branches. No, that doesn't work like that. Okay. So if you want to have 50 branches, you need to know, you need to strengthen the base first. That is how it starts. So mission could be roadmap to achieve the goal, vision. So first 5 international branches where I will have and what I need to do it to have that. So objective would be short-term goals, 2 branches in 1 year, or who can do that, where we can do that. All these things you can think about that. So this is how this vision, mission, objective becomes a important planning step in the organization, right? Okay. The next one, organizational planning. How the planning is done in any organization. There are steps as usual. So management, any concept, any theory you are going to study in management, any subject, we will be splitting them into steps. It's like a process. That's why I say we process of anything, any action. Any action will be made into steps. So it will be easier for us to do it on time. So a planning will give you where to start, when to end, how to do it. So this is how any planning will go. So how we do that? First you design the plan. Okay. So what is that plan? You know through the objective, vision, mission, and objective. So through that, you are designing the plan. That is the first thing. Okay. Design. Just, it is like an abstract one. You are thinking how to design. What would be the design? The second one is developing the plan. Putting it in words or figures. Right? Somewhere. Making it in the paper. The third one is operate the plan. It's like a pilot one. You just see where the glitches could come. If you're able to do that, then you can start executing the plan. Once you start execution, then you will be able to see where you are lacking, where are the glitches, where are the flaws in the execution, right? So even though you do everything, there will be crisis, chaos. You cannot avoid that. So the better thing is you should have a backup, like you have to observe how the execution goes, right? That is also part of the plan. How to observe, when to observe, where to observe, what points to be noted. It is also part of plan. So if you are able to do that, if you know what are the flaws, what are the mistakes in the execution, you are learning from that plan, right? Okay, so what happens now? Go to the first step. You are doing for the next year planning. So now we are more equipped because we know the data and we have learned from the past mistakes. So this time, my design, development and operation will try to avoid that flaw, right? It doesn't mean that now it becomes a foolproof plan. This year, you may be crossing some other flaw, some other problem may arise. Once again, learn from it. So this is like a continuous process. Planning continuously works in any organization. So what are the two types? As I told you, one is short term and the other one is long term. We have two types of planning. Short term plan is very flexible in nature and you can immediately measure it, how it is working. You need not wait until it is over. Anytime, at any part of any point of the process, you can think about it you can check it out, how it is working. That is why it becomes flexible in nature. If you think this is not going to allow you to reach the objective in 1 year, immediately you can change it out. But long-term plan is not like that. Once you fix a long-term plan, you should try to achieve it. To achieve that, you can make your short-term plans flexible. Are you able to understand? You should not go on erase the long-term. That is why I told you one word, make a vision and mission which is achievable, a target which is more humanly. Because visualizing is fantasizing, it is imagining, idea. So some people where they do commit the mistakes, it is only say after 10 years, instead of making 10 branches overall in the globe, they may think I want to be the number one in the universe, number one in the whole world. It's not easy one, right? So these kind of vision will lead to improper missions, which is not like you can say mission impossible, right? So what it will lead to? It will lead to short-term plans, objectives which are again not achievable. So in between, say for example, after 5 years, the organization will be in it will be in a big crisis. So you will not be able to reach the vision and you will be in a midway where you cannot go back. So you would have invested more, you have hired more people, the company had given a long, big promises to the consumers, right? So these things will put you in a hole which you cannot come up. So this is why you have to be careful. Differentiate these two. Long-term plans, no flexibility. Short-term, yes, flexible. So if you are able to understand that and plan accordingly, your success will be very near. So the next one, how we make the plans differentiate in another one way, single versus standing. See, some plans can be of only single use, right? And some plans can be reusable. You can make it every time, right? How to say that? Say, for example, automation. Automation is a single use plan. You want to computerize or you want to make something go automated in your industry. That is a single use plan, right? You are planning like re-engineering industry. These things are single use. Like you want to make an audit system which can do. So these things will once used, right? Once it is implemented in the industry, in the company, you need not do it again. So these things we call as single use plans, like automation or re-engineering of the company. But what are the standing plans? Rules, regulations, policy and procedures, all these things are standing plans. Once you have planned, this is how it is going to be, you can use those plans with a little bit of correction. Whichever you have learned from the previous execution, you can take the plan as it is for the next year. So this is the difference between a single use and standard plans. Okay, so that is planning, and we are coming to the next one, which is another one important topic which can be seen. The perception of MBO is everywhere, right? We take it in the planning also. What is this MBO? This is unique concept that came into force maybe some decades ago. And I think someone has to mute. Please, can you do that? I don't know who is it. Okay, I'm muting whoever is there. Okay. Okay. Right. Thank you. I think Bhaskara. Can Bhaskara please mute yours? Okay. Subaita Sabi. Can Subaita Sabi please mute your mic? So yesterday itself I told kindly avoid chatting during the class unless it is related to the class. Right? The class is meant for class, not for chatting with others, please. Okay. Thank you, Subaida. Okay, so we continue. So where were we? Right. Right. So MBO, as I told you, this is a very successful concept that has taken over. We call this as management by objectives. Right? So by the meaning itself, by the word itself, you can understand. So you have the objective as your fulcrum point. Right? So this objective will be the driving force for all the departments. Right? So based on that objective, every department will have their own plan of action for the particular objective period. Right? So how do we do that? First one, organizational objective is defined. That is by the top management. We have seen that. The second one, translate objectives to employees. Why we put the word, translate objectives to employees? Because this vision, mission, as I told you, is a visualization of the top management. Right? So it's always very complicated when you are communicating what you are imagining to the other person. Are you able to understand? That's why, how to say that, sometimes some films will be easy for you to understand. Some films, you will come home and then you will be thinking and understanding. Some films, even after coming home, you will not understand, because that is a visualization of the director. What he thought, what is presented in the film, what you perceive are three different things. Do you get my point? So what happens? What your perception is while writing the vision and mission may not be easily translated to the objective. So whoever as an employee, because even a sweeper in your organization is a stakeholder to achieve the organizational goal. Remember that.
I'm sorry to interrupt. Please start a slideshow.
Slide size, please.
Oh, you want this to be a slideshow, right? Once again. Once again, I'll do that. Are you able to see now?
Not yet.
Yeah, it will take some seconds. Is it okay?
No, ma'am.
It has to. Just hold on. Are you able to see now?
Not yet.
Okay, let's see. I think I have given it, but it is not transforming. It is not getting to you there, I think. Are you able to see now?
No, you can continue.
Okay, right. Okay, I'm giving you the points in case if you are not seeing, just you can note it down. Okay, right. So where were I? Yes, right. So the perception. So it is very hard to understand, and important point. You kindly remember and note it down. That's why, as I said, the last person, a security guard, a gardener, a sweeper, a cleaner, everyone is part of organization, right? So this is why we say translate the objective to employees. You cannot swipe them out that they are not involved in the organization. No, whoever does, even the amma who serves you in the canteen, who gives you the food, who is cooking that, everyone is part of organization. once you are able to successfully translate the objective to all your employees, you have crossed halfway in your goal, right? So that's why we say translate. Make it easy for everyone to understand what you want to achieve in this 1 year. Okay? Because the theory is simple. When it is vague, when it is ambiguous, one person is not able to understand. The purpose is failed. You cannot expect them to go with you unless you tell them where you are going. See, for example, you are going as a group, some trekking, right? If all your friends know the purpose, how the trekking would be, how the route would be, how long it will take to reach the summit, and where you are going to take the next break, food, everyone will be having a harmonious trekking. You can enjoy the trip. But imagine this, only you know when you will reach the summit, who is going to provide the food. Maybe you have arranged a good food, hot food is awaiting, but none of your group mates, none of your friends know that. Just they have to go with you. Do you think they will be enjoying? There will be murmuring in the groups. They will be just discussing with them. I'm feeling hungry. God knows whether we will have the food later, whether water will be available on the way, when we will reach, before the sundown can we reach. So this ambiguousness, this unclarity of the message. So what happens, it will slow down that trekking. They will not walk as fast as you, because you know the food is waiting, you will walk. They cannot accompany you. Are you able to understand? So when you are able to translate all these things, now imagine that you have given all the information to them. They will walk faster than you. They will push you to your goal. Right? So this is what we say, that it should be translated. It should be reaching to even the last person in your organization, the last person in the hierarchy, I mean, whoever on the last one. They also should know. So that is an important objective. The third one, once you have translated, everyone is working towards it, monitor the performance. Let's take the same example. You are making your group walk through the peak of the mountain. Monitor the performance. You cannot always lead. You should have the time, take the time, stand and watch how people are walking, how one is limping. Inquire him whether he has a problem in his ankle. Is he able to walk? If he is not able to, assist him with a stick. Right? See if anyone is thirsty, provide them water. Again, your group will walk faster. Monitoring the performance, how they are doing. If they are doing good, pat them on the shoulder. Say, see, you are a very good walker. You are doing the trekking very wonderfully. He will walk faster. Right? So this is what we call as monitoring the performance. The next one, evaluate the progress. See who is your liability and who is your asset. Right? If you feel them as asset, give them more motivation, make them fly. If you feel someone as liability, you think that they are not working properly or your mission is not up to your level, replace the mission, make the person more equipped. So make it, evaluate the progress so that you can move forward. The last one, reward and achievements. So this is how you can keep the thing going, right? Unless you recognize, you give achievements, or you what do you say, appreciate them, okay, it won't happen. So this is what the 5 steps of management by objectives. This is a separate concept. Okay, this is like you can run a company with MBO is such a broader topic, but as this is a part of planning and this is well used in planning, I just wanted to tell you in this junction. Okay, so this is what MBO is all about. Okay, with that, we are actually finishing up the first one, right? This is our first session. So I'm moving on to second. Kindly hold on till I open the second one, right? Are you able to see the screen?
Yes, ma'am.
Okay, thank you.
Yes, ma'am.
Are you able to follow the concepts?
Yes, ma'am.
Okay, thank you. If you have any doubts, kindly ask in these gaps, so that we can start with the second one.
Sure.
Right. So we are starting a new topic called strategies, right? You will be coming across this term often hereafter. Once you have started with the course, you can see a lot of strategies: marketing strategy, financial strategy, HR strategy, planning strategy. So strategy is such a, what do you say, a very popular word for this generation. Like even I heard once in a school where for homework, some students are having strategy to finish the homework. I don't know what that could be, but it is good that they know it is such a kind of plan, right? It's not a simple plan where you have some nicks into that so that it can be a strategy. Okay, so that's what we are going to learn. Actually, we have the right to do so because you are management students. So I think we are more rightful to study this, right? So, what are these strategies? I think I need not explain the word to you much. Right? All of us know we have strategies to overcome our problems, overcome our dilemmas, right? So, we use some sort of techniques. That is called a strategy. This is age old, okay, right? All of you know one strategy. Whoever has gone through Mahabharata, that is Abhimanyu has gone through the Chakravyuha. I think everyone knows that Abhimanyu went into that and he doesn't know how to come out of that. So he died in the middle of Chakravyuha because that strategy that is made in war is of a circular one, right? Chakra means circular. So it is like made in a circular way. One can get inside like a maze, circular maze. So that is war strategy, right? So strategy it is like a set of plan, a set of activities, action plans, right? To achieve something. You have a goal to do that. That is why I have given you, if you see in the picture, it is like previously the workflows are not proper. They are in a like noodles. They are in between among themselves. They are nettling among themselves. But if you have a clear strategy, what happens? It can go exactly to the spot. There is no more wastage, no more energy spilling, so it will be direct to the dot, right? So strategy helps us do that. John Philip, can you mute the video, please? Okay. So as I started with that, where the strategies came from? Strategies came from wars. That we cannot deny. Okay, because when people started acquiring other person's land for anything, for more area or food grains, what they hold, or for women, whatever it is. So it started with war. When you are going to hit that other land, how you are going to do and who all are going to do. This is the planning they did. Simple. Are you going to attack at night? Are you going to give your elite warriors in front or back? And how long this is going to do? So this is how all this started. So what this word means, to lead army, right? What is strategos? To lead the army. Who can do that? And you can study a lot of war strategies from Mahabharata, as I told you, right? A lot of vyuha. We say vyugam in Tamil and vyuhas. So that it is like how you arrange your men, warriors on the line. That is vyuha. How to attack or how to defense, not only offensing, how to defense. So that is one kind. And that was almost all over the world. In World War II, we have seen n number of strategies. Okay, I World War One also 1, 2, and like Sun Tzu's Art of War. It says Art of War, right? See the nuance in that. It says a lot of strategies how anything can be won. So if you think the organization's objective to be achieved, or it is like a race, you have to go and pick it out, that trophy, then you have to go for strategies in organizations also. It is not that you have to make war with other company. It It is like pushing yourself to the winning point. You can think like that. Okay, right. So what the strategy help like? So it gives, if you are able to strategize your objectives and goals, it helps you to understand what is our purpose, why the company is run. Is it for profit? Is it for service? Is it for making fame for you? Is it for putting you in number one in the world as a richest person? So you will understand why the company is run. How the environmental force impact our business. Because see, as I told you, this is any business has to be ethical. You cannot deny that. So you have to think about the strategies will help you understand how the environmental force will have the impact on our business. And who are the stakeholders that is important to our business. The strategies will help you. Prioritizing which stakeholder. Like if you want to put your employees first, fine. If you want to put government first, fine. If you want to put yourself first, fine. The stakeholders, you can put it in a hierarchy. And which business to compete? Who is our competitor? They say, unless you know the weightage of your competitor, it is very hard to compete. There is a Tirukural which says that you have to know the power of the opponent. You cannot undermine the opponent's power. Moreover, you have to ascertain the weightage of your opponent. And it doesn't stop there. What the next line says, you have to ascertain the weightage of the alliance, whoever is standing with him. Right? See, these things are like, what do you say? You have like bonus of these things. A lot of things are there. Okay? Like a treasure. You can see if you start taking a lot of strategies will come from Tirukural or Mahabharata. It's like a treasure trove. Okay? So it says that you have to ascertain the weight of not only your opponent, also the alliance of your opponent. Right? Okay. Then whom to serve? Who all you are serving? And what is the purpose of that, and how to distinguish yourself. The strategy will make you stand out. So this is a reason why you have to take the strategies, right? Okay. So with that, we come to the next topic. I have any doubts in that strategies? I need not say much here because you have a paper in second semester called strategy management. So in that, you will be studying a full paper on what is it, how to do that, and how to master that. So I think we can go to the next topic, unless you have any doubts still here. Shall I continue?
Yes, ma'am.
Okay, thank
Yes,
you.
ma'am.
Yes, ma'am. Please continue.
Okay. Hope I'm reaching you. Okay, right. So next one, we come to decision making. As other things, decision making is the another important thing, because we all get stuck when in dilemmas. Like this is the hardest part in running any organization, because all the decisions are not easy, right? Because any decision will be resulting in one side good and one side bad. If you are doing good for someone, same decision may be bad for the other one. So decision making exhausts. Unless you think much, you cannot decide better. So that is why the top management will feel drained out if they have to do the decision making continuously again and again. So how to do this? How to be a good manager? How to do a rational decision making? There are techniques. Define the problem. Now you can actually side by side, I'll tell you some more points. In your MBA question paper, have you seen your question paper? It has 3 parts, A, B and C. A is smaller answers, B is a little bit essay type, bigger answers, and there is one part C, which is a case study, and it is mandatory. Okay, you cannot evade that. There is no choice for part C. And you know how many marks part C holds? 20. Right? 20 marks. Case study is Ranabir Majumdar. No chatting during the class, please. Unless it is related to the class. I told again. So don't please chat anything else. Okay, right. Come back.
So what I was saying, yeah, case study, which is for 20 marks. You cannot avoid that, right? And many of you might not know what is a case study or how to attend to that, right? So here we have started the first step as define the problem. That's where it stuck me. You have to understand this part, decision making, properly, so that it will be easier for you to attend the case studies in future. If time permits, in the last class or in the 7th hour, okay, I'll try to teach you how to attend to a case study. If I'm able to complete the other topics sooner, we will see to that. You just remind me during the 6th class, okay? Right. Come back. So first one is define the problem. This is the biggest hurdle, because what the problem which is present to you on the surface may not be the problem in reality. What you see on the surface may be a tip of the iceberg. The Titanic story, right? By looking at the tip of the iceberg, the captain thought he may easily go through that iceberg, and when the ship moves, the iceberg will give way and it will move. But what he missed to see that the tip of the iceberg was very small, but the chunk of the ice beneath the tip was so big than the Titanic. That is how always it will be, right? The hidden problem will be huge sometimes. So you cannot just look at a problem and say this is a problem. You have to see what is the problem below the surface. That is called as a hidden problem. So if you are able to do that and define the problem, half of your problem is solved. You can arrive at the decision very easily. Then, when you are able to see that, the problem, identify the goals. By the decision, what is that you are expecting? What is the consequence? What is the result you need? Then come to the factors. What are all the factors you are going to put into that? What are all the factors that are going to be affected? How you can prioritize that? Through the importance or value of those factors. The value need not be monetary as immediately it comes to your mind. Value is not always monetary, right? Value can be of anything else. We will see about the value in our OB class. After some 4-5 sessions, while seeing the organizational behavior, we will look about more about the value, okay? So weight the factors based on the value on the importance. So now when you know you are having all the data in your hand, you know what is the problem, you know what is the result you want, and you have the factors in hand, right? This is like, imagine like a cooking, you know what you want to make, okay, and you know what is that, and you have all the ingredients in that. Now prepare a possible course of action. How to put, when to put, how much to put, and how to mix. That is designing a possible course of action. And now you see on the desired outcome, you have a lot of course of actions, rate them, rank them based on the desired outcome. What would be the outcome if I choose A, choose B, choose C? When you have these options and you have the desired outcome, whichever you want, choose that optimal decision. This is a scientific way of making a decision when you have the proper ingredients, right? So I have given you one example for that. Packaging material for cool drink, how to design. You have 3 options, right? One is carton, glass bottles, and plastic bottles. You have to decide which one you are going to use for the cool drink, right? So you have to select is the problem. Any one of the options available. What is the objective? I have 3 factors. Somebody's mic is on. Can you please mute it? Rahul Prashant.
Rahul.
Who is that? Kindly mute.
Rahul.
Okay, kindly mute it. Okay. So I have the factors: cost, environmental friendly, and the resource should be continuously available to me, right? So this is how I have taken the 3 factors, just for a small example, okay? So what is the course of action? I am trying to find out what would be the best, what is the optimal solution for me. See, the cost means carton costs 2 rupees, the glass bottle is 5 rupees, and the plastic bottles are only 1 rupee. But is these two economic friendly? Yes, but not the plastic. Plastic is not economic friendly. The carton available? Yes, it is paper, so continuously available. Glass bottles, yes. But sometimes the plastic availability, in India, it is like a monopoly market, availability of raw plastic. So sometimes you cannot predict. You have to wait for some months to get some raw material for plastic. So it cannot be predicted. So check the three objectives. Now, optimal decision. Which one you will go for? You can just think and you need not say, but this is how you will be presented with in the organization. When you are in real time working, you have to select any one and you will be responsible for your decision. That is the sword on our head, swinging on our head. Wherever we take a decision, we become totally responsible and you have to hold on to that responsibility. Keeping that in mind, and remember, the responsibility is not only towards you. It is not about my job if I am deciding. It is about the society I am living in. I should not harm them. It is about the organization I am working. It should not harm them. It should not harm me. So the responsibility is always threesome. It goes through all these three. It has to be a optimum decision. So what will be your decision? You can think and decide. Okay. So what are the factors on decision making? Usually, which clogs our mind at first, emotions. This is that's why I told you, clogging the mind. It clogs the thinking process itself. You cannot move over that if you are emotionally stuck. So can we totally erase this emotion from decision making? Don't we have to think about the emotion at all? No. If you remove the emotion from you, you are not human. You have to have the emotion in decision making. That way only you will see your decision is not harming anyone. You can see in most of the this disaster that is happening in the environment or the society or the country because of the corporates, because of the organizations, you can see that those decisions would have been taken without emotion in mind. I remember one disaster which I don't want to take up from local. I remember one incident which happened. I think the river name is Danube in Hungary, that side in Europe. CM, kindly mute. One fine day, a copper industry was holding up a lot of waste, rainwater at one point, and it broke. And it ran towards, I think the river is Danube. And which is such a beautiful, pure water, was colored for nearly, I think, 3-4 days. It was running in a black color. Are you able to see the presentation?
No, ma'am.
No, ma'am.
I think somebody
Right now, yes, principal.
just hold
No,
on.
ma'am.
Hold on. Are you able to see now?
No. No, ma'am.
It is
No,
presented.
ma'am.
It is presented.
No, ma'am.
Are you able to see now?
Yes, ma'am.
Yes,
Yes, ma'am. Now it's
Yes, ma'am. Yes, ma'am.
Okay. I think someone has interrupted in between. Lakshmi, can you mute your video, please? Mute your mic, please. Okay. Right. So we come back. Okay. So where were we? That's what. In Europe, in Western country, it's very, very rare incident to happen. But that's how it happens, So the decisions you take should have emotions. But as I told you, the emotion should not clog your thinking process, right? It is like balancing. Have the emotion so that you can have an empathetic decision, but keep it in check, right? The second one is usually the intuition, what we call it as a gut feeling. Many of us will say that, gut feeling. Why we say that as gut feeling, because when you are thinking like that, you will feel something in your gut. I don't know whether maybe the bacteria is present in there or I don't know. But we say it as a gut feeling. That is our intuition. So how it happens, by the memory. by the past experiences we have, the knowledge which is underneath the conscious mind, subconscious mind, it is stored. So this, when you are forced to take a decision, when you are like cornered, you have to take, suddenly this will erupt. These past experiences, the knowledge you have acquired, which you long forget and you don't think you possess, right? That will push you, like the adrenaline will work, and intuitions we call it. Suddenly you will feel like, okay, the bulb is going on, it's bright. You have come to a conclusion, right? That kind of decision making we call as intuitions, right? The third one is social situations. You are forced to take a decision because of the society, social factors which is around us, in business also. Then biases. Biases is, like you don't have the time. You have to push yourself to take a decision. Or at one factor, like as I told you in the previous example, plastics, you don't have the information. You are not able to predict it, when you will get, how the future will be, or the complexity of the calculations. You are not able to easily find out what would be the outcome. So all these things we call as heuristics, cognitive heuristics, because you have the biased feeling. You are not giving justice to all the factors. So you are partially inclining to some of the factors, and that way you are taking up that decisions. So these all things happen in everyone's decision making, whoever it may be. He may be the president, he may be in UN, or he may be a commoner who may be a household husband. Everyone goes through these things while making a decision. At mornings, you are getting ready to go to the office. How many times you stuck up near your dress shelf and think which one you have to wear, right? At that time from tomorrow, after you decide, think which one of these factors have dominated your decision. Are you able to get my point? Don't think before deciding. You decide. Say, I want to wear red today. You take it up. After that, you just think which one of these have dominated. Most of the time, the color we decide for that day, it is like a mirror to our feeling on that day. How you feel, happy or sad or not bothering, all these things will reflect in your decisions, emotions, right? Or cognitions which we don't know, like intuitions. So you can see that even a small decision has this. So think about the other things, how we will be thinking over to get a optimum situation to make a decision, right? Okay, so with that, we go to the next one. Okay, so organizational decisions. How organizational decisions work? One is programmed, the other one is non-programmed. A programmed decision is well-defined set of problems. You know already it is happened in your organizations, it is repetitive. So you can have a protocol, you can have a programmed decision. When this happens, use this. Non-programmed decisions are new. It's a crisis, suddenly it happens. You don't know. It is an unstructured situation. So you have to have the best judgment ability. You have to go through all the factors just we saw, and you have to arrive at one optimum decision, right? So with that, we finish the decision making topic. Okay, we go to the next one. So planning is finished now. One topic is over. Okay, so first step of management, what is that? Planning. So overall, we have seen all the factors in planning, how to plan, what is planning, what are the different types of planning, and what are the components of planning, like what are strategies, and how you keep decision making is a part of plan, and how an overall concept like MBO can be used for planning, right? So this is the first step in management. So we have to start staffing actually. Okay, staffing. I'll start as we have some 5 minutes more. I'll finish. I'll start and keep it, right? We don't have even 5 minutes. Okay, I don't want to keep you from your lunch. Okay, right. Staffing is our next process. What is this? You have the plan. you have all the resources. Now you have to place people, you have to take people to start the work. That is staffing, right? To implement the plan, you need people. To execute the plan, we need people. So what is staffing? It is a recruitment process, then placement, giving them directions, motivating them, leading them, and evaluating or appraising their performance. Right? This is staffing. I need to explain this a little bit and we'll finish and go to the next one. See, we will be seeing this in elaborate way, this entire 6 steps in your second semester human resource management. Most probably I'll be handling that for your second semester. So we will be seeing this as an entire paper, this staffing, right? What is that called? Human resource management. We will see from start to end. What is recruitment? It starts from advertising. This is not only selection. Recruitment is from the application pool. How you make the application pool? If you give good advertisements of your company, of the jobs, right? If it is not lucrative, if the job is not attractive, you will not have competent people to apply for it. If you don't have competent people, how will you select good people? Are you able to understand? You have to select someone from the pool. So the pool should be rich. You get it? See, most of the time while going for MLA or MP voting, we feel sad. Why? Because we have to select one among the people. Sometimes we may not like any of them, 7, 8 of them who are not, we think, fit for that job. Why is that? Because the pool is like that. You have to select one among them. Are you able to understand? So if you want good people for your organization, then you should have good applicants. How you get good applicants? You should be having a, what do you say, goodwill. You should advertise for your job so that you have a rich application pool. From that you select. All these process, advertisement, making application pool, and selection is recruitment process, right? Selection itself is a very big process. We will see, as I told you, promised you, in the second semester. Then once you have selected people, placement is the next step. You have to put them in the right place. A wrong person in a right place is a total disaster. When I don't love my job, when I don't like my job, I am not going to be productive, right? So that means it is a wrong placement. A person should feel satisfied, at least, if you're not happy, at least satisfied at the end of the day. When I'm going out of the seat from my workplace, I should feel at least satisfaction. Okay, that is right placement. If you are not feeling that, then you have to think about whether you are rightly placed. It's a responsibility of the organization, right? The third one is directing. Yes, I am placed. If I am not given with the directions where I have to go, as it is the objective or the goal of the organization, I will not move. I will be staying here. So directing to the staff. The next one is motivating. Even though, as I told you in the mountain trekking example, you have to give them water if they are thirsty. That is motivation. As a group leader, if you take the time to stop for 2 seconds, pat on the shoulder, are you feeling thirsty? Drink this. Do you know how much motivation that will give to that person who is in thirst? That is motivation. That will keep him going. It is not only the water that has quenched his thirst. It is about the person who is giving the water. See, the group leader had taken the time to notice me and given me the water. That is motivation. Are you able to understand? Then the next one is leading. After giving the water, if you drink the water and you go in front of the team in trekking, that is leading. They will be happy to follow you. And performance appraisal is whether they are walking in unison, harmony, and they are having doing the work without any conflict. If you are noticing that, that is performance appraisal, right? So this is all about staffing. This much is enough for us in this particular paper now. So we will be seeing this elaborately in the next one. So tomorrow we will be starting up with organizing, which is a little bit bigger topic. So tomorrow we will see the next function of management, which is called as organizing.
Ma'am, tomorrow the class is there, ma'am.
No,
on
not
Monday.
tomorrow. Sorry. Which, if I
No,
will,
next
next Saturday, right? So we will be having classes only Saturday and Sunday. Okay.
Okay, ma'am.
Sorry for that. So next Saturday, same time we will meet. And I request you, don't forget the subject or whatever we have studied. come prepared a little bit. We will be seeing organizing next week. So I will be very happy if you are able to contribute and take part in the class by giving some input to the class.
Ma'am,
Right?
for next Saturday class, there will be new link will come in mail, ma'am.
Krishna Kanza, I'm not able to hear you properly. Can you say it again?
No, ma'am. For next Saturday, the new link will come on mail, ma'am. New Google link.
No. Same Google link. You will be having the same Google link for all the 8 days.
Thank you, ma'am.
Okay. Okay. Any doubts regarding the class? Anything you want to know?
Ma'am, this is
Krishna Kanta, can you mute, please? Yes. Who is this?
Any sample paper will upload in the website.
Swaminathan. Yes, I don't get your question, please.
Any sample paper may upload in the website, madam.
Question paper. You are asking question paper.
Yeah.
Yeah, it is already uploaded. Few question papers are there in the website.
Okay, thank you, madam.
Okay. Anything else? Okay. So today also, as expected, there is no question from the lessons we have seen. Little disappointing. Okay, no problem. Okay, this is, yeah, Venkatesh.
Ma'am, is this, I have one question, ma'am.
Yes.
Ma'am, I bought a washing machine previous month, ma'am.
Okay.
That is not my decision.
Okay.
I took my decision because my parents enforced me to buy that washing machine. This is which kind of decision, ma'am?
Social situations. The factors that has influenced you is social situations. And because of the social situations, you are emotionally biased because see, it is your mother and father. Maybe if the social factor is your friend, right, or your neighbor, you may not have heed to their request. You may not have given weightage to that. Okay, you have just swiped it up. But because it is your mother and father, so what happened? You are emotionally bound, right? So what dominated you is mostly emotional. You are inclined to your mother and father, you're affectionate, so you cannot say no. Most often it happens, right?
Okay.
Right. So when you start analyzing your decisions, when you start thinking like that, your decision making will be fine-tuned actually. And what is the best benefit you get after you are analyzing your decisions, you will own the responsibility. You will take the responsibility. It is my decision. When you start taking that responsibility, that decision is mine, you will not put the blame on others. The relationships will be healthy. I'm telling you, if you follow this, you will not put blame. Usually we play the blame game, for anything goes wrong with the washing machine now. What will you say immediately? You will say to your mother that it is you only forced me to buy. But when you own the decision, yes, I was emotionally biased because of my mother, so I took the decision to buy the washing machine. So if it goes wrong also, you will own that. You will not shout at your mother. Your relationship will be stable, right? The other thing, when you start analyzing the decisions and you are owning the responsibility, you will be free from regrets. If something happens also, you will say, okay, I took the decision, it went wrong, so there are no regrets. I own that. So actually, this is like, it will change your lifestyle. That's why I said in the first class also, before MBA and after MBA, you can see, if you are able to absorb the points and apply them in your life, that will certainly fine-tune your living style. Your living standard will go up. Like next class, we will be seeing organizing. If you are able to follow the organizing also, see how beautiful the life will become. Okay? Okay. So thank you very much for the patient listening.
Ma'am,
yes?
can we get your PPT, ma'am?
You want this PPT?
Yes, ma'am. Because see, the website is quite different. This is little easy to understand.
Okay, but I can give you the PPT, nothing wrong. But I strongly suggest we understand the purpose. This PPT is a teaching tool. This is for me, right? So that there is a communication between you and me. But this is not notes. Okay, this is how I feel so that I can teach you. So don't take it for notes. So notes is something else. You have to refer to book for exams. Don't rely upon PPTs That won't help you. Okay?
Okay, ma'am.
Sure,
Okay.
I will share the PPT with you. Right? Okay. Thank you very much. Thank you. We'll see next Saturday, same time. Thank you very much.
Thank you, ma'am.
Thank you.
Thank you, ma'am.
Thank you.
Thank you. Thank you.
Thank you, ma'am.
Thank you, ma'am.
Hello, ma'am. Is the class is over? Hello. Hello. Please anybody tell me the session is over?
Hello. Hello. Students.
Yes.
Yeah, the
Good
classes.
afternoon.
Yeah, good afternoon. Now it is lunch break 1 to 2. You can log in again by 2 o'clock.
Okay, thank you.
Classes will be resumed by 2 to 4 again.
Okay, thank you.
Okay, thank you.
Good afternoon, everyone. Am I audible?
Yes, sir. You are audible.
Okay.
Good afternoon, sir.
Good afternoon, sir.
Are you able to see the slide?
Yes, sir.
Okay. We will start in a few minutes. Yes, any doubt, any interactions? We have 4 minutes. In the meantime, we can have some interactions if you have any queries. Any queries? Sunday, 2 o'clock is the time to consume flying and swimming.
Sir, good afternoon, sir.
Good afternoon, good afternoon.
Sir, this is for the MBA first year, first sem, right, sir?
Yes, yes.
Okay, sir. Yesterday I was a bit confused, so.
MBA, first year, first sem, paper 2, managerial economics.
Okay, thank you, sir.
Is there any option to upload the document in the Google Teams? No.
No, sir.
Today I need to go a little more fast also, students. Yesterday I had completed maximum 25 or something else. Today I have 70. And today is the target to complete unit 1. My problem is I have a lot of examples. Are you able to see the screen, students?
Yes.
Yes, sir. Yes, sir.
Yes, sir.
I think
Yes, sir.
time is 2 o'clock. Shall we start now?
Yes, sir.
Yeah. So what we are discussing is circular flow of economic activity. You know that there are 4 sectors in an economy. Here we are focusing on just 2 sectors, simple circular flow, just first step. Next slide we will see all the 4 sectors. Okay, it is simple 2 sector economy. For basic understanding I am giving to you. Now here there are only 2 sectors. One is household sector, another one is firm. Firm is the producing unit, household is the consuming unit, as well as providing factor services to the companies. Okay, now already I told you that the starting point is from the household, where in which they are providing factor services or inputs to the firm. Firm is using those inputs, converting into output. By doing that, they are providing factor services, or we can say factor cost to the household. That is in the form of wages, interest, profit, rent, etc. Assume that it is 1,000 rupees. Okay, and the firm spend 1,000 rupee to produce goods and services. So firm is having right now 1,000 rupee worth of commodity. Say for example, 1,000 rupees worth of X commodity that firm is having. Now, what firm will do with that commodity and what this household will do with money? So, after receiving 1,000 rupees from the firm in the form of wages, interest, profit, rent, which we call national income, they use that money to buy goods and services produced by the firm. That is called personal consumption expenditure. Okay, assume that the entire 1,000 rupees is flowing to the firm to buy goods and services. Now, after receiving 1,000 rupees from the household, firm will send commodity to the household. That is what is all about. 2 sector circular flow. Simple 2 sector circular flow. This is the way 2 sector interaction between the 2 sector take place. One is production unit, another one is consumption unit. Okay. With this basic information, we are moving on to 4 sector circular flow with monetary flows. Right now, we are not going to consider physical flows. For the sake of your understanding, I gave physical flows. Now, no physical flows. What is physical flow means? Providing input services, getting finished product is what is all about physical flow. Now, we are not going to talk about physical flow here, only monetary flow for 4 sector. Sector 1 is household, sector 2 is firm, sector 3 is government sector, and sector 4 is foreign sector. These are the 4 sectors in an economy. Okay, already we have discussed about 2 sector. Now let's see the interaction between these 2 sector. First point of flowing money is from firm to household in the form of payment of factor services. That is what is all about rent, wage, interest, profit, dividend received household from the firm. Using that money, say for example, it is 1,000 rupees. Okay, as per our previous example. From the 1,000 rupees, say for example, they are spending 800 rupees to buying goods and services. Okay, for example, 800 rupees they spend to buy goods and services produced by the firm. Rest of the 200 rupees is called saving, and the rest of the 200 rupees goes to financial market. From that financial market, it goes to firm for expanding their business operation. Okay, so in this case, there is no leakages or injections in the circular flow. 1,000 rupees are provided by the firm to the household. Same 1,000 rupees are flows taking place in an economy, so there won't be any disturbances. This is what is all about two sector. Moving on to the third sector, government sector. So firm pay taxes, corporate profit tax, and so on and so forth, the tax to the government. So money is going from firm to government in the form of taxes. And government also buying goods and services produced by the firm. Say, for example, a computer and so on and so forth, furnitures, tube lights, fans, etc., purchased by the government sector from the firm. For that, they are making payments. Not only that, also transfer payments. What is transfer payment? Means subsidies and other incentives provided by the government to the firms or corporates. Now, moving on to the discussion between household and government sector. Households, which means people, they pay personal income tax or indirect taxes to the government. Similarly, government provides services to the people in the form of administrative service expenses or transfer payment like unemployment allowances or DBTL, direct benefit transfer scheme. Right now government is giving. Tomorrow they are going to provide it to our Indian farmers. Okay, that is what is all about government money flowing to the household. Now moving on to the fourth sector, that is external sector or foreign sector. Now, what is the relationship between firm and external sector? Firm pay money to the foreigners by buying goods and services from them. Okay, making payment for imports to foreign sector. Similarly, firm receive money for exporting goods to foreign country. This is called receipts from exports to the firm. This is what the relationship between firm and foreign sector. Now, moving on to government sector and foreign sector. Receipts of international payments on government account received by the government in the form of incentives, in the form of external assistance, in the form of special drawing rights from IMF and other things. Okay, government receive money from the foreign sector. Similarly, government provided money to foreign sector. Say, for example, recently we provided financial support to Sri Lankan government for their financial crisis. Those are called payment made to the rest of the world on government account. Similarly, there is a transaction between household also, which is missing in the diagram. Say, for example, workers' remittances, okay, from foreign sector. People are working in abroad, Middle East and other country. They are sending money to their family members for home maintenance. That is called workers' remittances. That is the way we receive money. Similarly, we pay money to foreigner. Foreigner, those who are working here, they will be sending their salary and income to their country. That is what the relationship between households and foreign sector. Okay, so this is what is all about circular flow of economic activity. Kindly remember that there are four sectors in an economy. One is household, another one is firm, another one is government sector, another one is foreign sector. Okay, and this transaction between these four sectors is taking place in three markets. One is goods market or commodity market, another one is financial market, another one is input market or resource market. So in an economy, there are four sectors and three most important markets are taking place. Now moving on to demand analysis. This is what is most important topic, but a very simple topic for us to understand. So here, demand, what are the relationship between demand and who are the people involved in influencing this demand? Okay. Now, first, firm and household, the basic decision-making units in an economy. Any country, irrespective of USA or Nigeria or India or any country, the basic decision-making units are firms and households. They are the one who influences economic activities. What is firm? Already we have discussed in the last class extensively. Firm is an organization that transforms input into output using optimum or using optimization technique. That is what is all about firm producing units, we can call simply. Second one is entrepreneur. Who is the entrepreneur? A person who organizes, manages, and assumes the risk of a firm, taking a new idea or innovation or whatever policy it is, who manages inputs, converts that into output, is what is all about entrepreneur. Finally, why I gave special effect is household, the consuming units in an economy. They are the one who play a major role in influencing demand for commodity. Okay, so the consuming units, as long as there is a demand, there will be investment. When there is an investment, there is employment. When there is employment, there will be a GDP. So Household is one of the most important consuming unit that influences economic activity. So household are the one that influences demand in the product market or output market or goods market or real sector, all are remaining same. I can say that product market, goods market, output market or real sector all remaining same. Household's decision about what quantity of a particular output or product to depends on what are the factors, which means what are the factors that are responsible for influencing demand in an economy. Naturally, the first and foremost factor is price of a product, no question about it. Okay, when price is low, we will demand commodity. When price is high, the demand will be low. So most important and influencing factor for demand is price. The second factor is income. When income is high, demand will be very high. When income is low, demand is low. The household's amount of accumulated wealth, which means wealth of an individual or inheritance property or forefathers property, whatever it is called, is all about wealth. When I have more wealth, other than my salary, my consumption will be very high. Prices of related commodity, which means price of, there are two commodity, X and Y. X and Y are related commodity. When price of X rises, demand for X falls, but demand for Y rises. Or else, I am consuming X commodity, no changes in price of X commodity, but price of Y commodity rises. I will stop consuming Y commodity, I will consume more of X commodity. Say for example, X and Y are considered rice and wheat. Household's taste and preferences. If I have taste and preferences, then only I will consume a commodity. Forget about price, income, all the other variable. Without taste, definitely I will not consume a commodity. Taste and preferences does matter. Next one is expectations about future income, future wealth, and prices. I will discuss this little more. There is one simple formula. Using that formula, I will explain you little more about this concept. So future income, wealth, and prices are also a variable that determines demand. Here, ceteris paribus condition or other things remaining same must apply, which means when we are talking about demand and price of the product, all the other variables kept aside. So these are the other variables should be kept aside when we are discussing about demand and price. When we are discussing about demand and income relationship, all the other variables kept aside. This is what is all about ceteris paribus condition, other things remaining same. Now, law of demand. What is law of demand? It is a law, it is a rule that expresses inverse relationship between price and quantity demand. Okay, this always applies. When price rises, demand falls. When price falls, demand rises. That is what is all about law of demand. Okay, other things remaining same. What are the other things means? Income, taste and preferences, price of related commodity, all other things remaining same. We can write this relationship in the form of equation. QDX equal to F of PX, which means quantity demand for X is a function of price of X. What relation? Inverse relation. When price rises, demand falls. When demand falls, price rises. I will tell you the reason why little later. Now we can see this one simple equation. We can understand this entire concept. Are you able to see this equation, students?
Yes, sir.
Yes,
Yeah.
yes, sir.
Look at
Yes,
this.
sir.
Quantity demand for X commodity. Quantity demand for X is a function of price of X. PX is price of X. PR is price of related commodity. Y is income. T is taste. EY is expected income. EP is called expected price. ADB is called advertisement expenditure. Say for example, quantity demand for X is an inverse function of price of X. Are you able to see that I am drawing minus line above PX?
Yes, sir.
Yeah.
Yes, sir.
So quantity demand for X is inversely related to price of X. When price of X rises, demand for X falls. When price of X falls, demand for X rises. Other than X, all the other variables have positive relation. How? I'll tell you. PR, price of related commodity, rises. Demand for related commodity decreases, but demand for X commodity rises. Say for example, X is boost and PR, the related commodity is called Bonvita. When price of Bonvita rises, demand for Bonvita fall, but demand for boost rises. Okay, and income. When income of the consumer increases, demand for X commodity are also rises. Okay, When income of the consumer rises from 10,000 to 20,000, restaurant food or once in a week I am buying biryani from the shop means my salary doubled. 10,000 to 20,000 means demand for biryani will rise per week once to twice or thrice. That is assuming biryani is a normal good. And then taste and preferences. Taste and preference on X commodity increases in the sense means quantity demand for X rises. And the next variable is expected income. I'm expecting that there will be a double in my salary. My employer is going to double my salary from next month onwards. In the sense means quantity demand for X will rise. Okay. And then expected price. I am expecting that price of X commodity is going to increase from next month onwards. I will buy more of X commodity this month itself. So positive relation. And the next variable is advertisement. When firm is spending more advertisement expenditure on X commodity, then the commodity will reach us to majority of the customer, then the demand for X will rise. So other than price, all the other variables have positive relation with quantity demand for X commodity. Are you able to understand this relation, everyone?
Yes.
Yes, sir.
Yeah, very simple only. Very simple only. If you have any doubt, kindly refer the textbook. Now, price of quantity demand, the law of demand. Now, demand schedule. We are going to derive the demand schedule, which means demand curve, showing inverse relationship between price and quantity demand. We are using one simple tabular data to derive the demand curve. And that is one variable is price, another variable is quantity demand. We all know that price and quantity demand are inversely related. When price of the commodity increases, quantity demand decreases. We can see the first combination A, 0 is the price, 30 units of phone call we make per month. And when price goes from $0 to $0.5, quantity demand for making call decreases 30 calls to 25 calls. Then combination C, tariff rises from $0.5 to $3.5 per call. Then demand of making calls per month decreases from 25 to 7. And combination D, tariff per call rises from $3.5 to $7. Monthly making call also decreases from 7 units to 3 units. Likewise, when price rises, quantity demand decreases. Using these tabular data, we can derive a demand curve. Okay, this is what the derived demand curve. When price is 0, 30 units of phone call we are making per month. When price is $0.5, 25 calls. It is $3.5. The demand for phone call decreases to 7. Further increases to 7, decreases to 3. Further 10 rupee per call, only one call we are making. When price is very high, 15 rupee, we are not making phone call. We may see any other alternative ways through Google Meet or anything else. Okay, this is what is all about derivation of demand curve. Now, demand curve slopes downward from left to right because why demand curve slopes downward from left to right? This means there is one concept called LDMU, operation of the law of diminishing marginal utility. Did you heard this concept anytime, students?
No, sir.
I'll give one example. Say, for example, I am very much tempted to consume one Rasagulla, and the Rasagulla price is 10 rupee. Okay, I am taking the first unit of Rasagulla. My satisfaction is very high. I am willing to pay 10 rupees. After consuming the first one, second Rasagulla, will I have the same level of satisfaction, students? No, my satisfaction will get decreased. So I am not ready to pay the same amount that I paid for the first unit that gave higher level of satisfaction. Likewise, 10th unit of Rasagulla, what will happen to my case? Will I get any satisfaction for 10th commodity?
No, sir.
No, definitely I will not get because my temptation goes to 0. So in that case, I will not prefer to buy a Rasagulla. I'm not ready to pay 10 rupee. So when you keep on consuming a commodity continuously, satisfaction from the commodity keeps on falling. As a result, you are not ready to pay the equal money which you paid for the first unit. That is called law of diminishing marginal utility. And the second reason why demand curve slopes downward from left to right is income effect. When income increases, demand rises. Okay, there are two kinds of income. One is nominal income and another one is real income. Okay, when nominal income rises or real income rises, demand increases. What is nominal income means? My salary. Assume that my salary is 100 rupee. Okay, my salary increases from 100 rupees to 200 rupees, my demand for X commodity will increase. Okay, say for example, per unit of X commodity is 10 rupee. My salary is 100 rupee. So 100 rupee I can buy 10 units of X commodity. My salary rises from 100 rupees to 200 rupees. My demand for X commodity also rises from 10 units to 20 units. That is called nominal income. My salary is called nominal income. Real income. What is real income means? Comparing salary with price level in the market. Okay, that is called real income or purchasing power. We can say simply, when inflation rate in a market is 10%, okay, I am buying 10 units of X commodity by spending 100 rupee of my salary. Suppose price inflation decreases from 10% to 5%. As a result, my real income will rise from 100 rupees to 200 rupees. Even though my salary remains same 100 rupee, but my real income increases from 100 rupees to 200 rupees, which means income associated with real purchasing power, which means price fallen from 10% to 5%, my purchasing power doubles. Say for example, previously X commodity is 10 rupee, I can buy 10 units of X commodity by spending 100 rupee. Right now also my nominal income remaining same 100 rupee, which means compared to January, in February my nominal income or salary remaining same 100 rupee. But price level decreases from 10 rupees to 5 rupee. As a result, my real purchasing power doubled from 100 rupees to 20 rupees, 200 rupees. So instead of 10 units of X commodity, right now I can buy 20 units of X commodity. Are you able to understand, students?
Sure.
So
Yes, sir.
Nominal income is
Yes, sir.
salary that you are getting from the employer. Real income means you are comparing nominal income with the purchasing power and measuring your income. Okay, or simply we can say formula is nominal income divided by price index or inflation is called real income. Okay, or nominal income substituted minus nominal income minus inflation is what is all about real income. Okay, it's very simple example. When my income is 100 rupee, I am able to buy 10 units of X commodity. When price level is 10%, inflation is 10%. My nominal income remaining same 100 rupee, but price level or inflation decreases from 10% to 5%. As a result, my real purchasing power doubled, which means instead of 10 units of X commodity, I can buy 20 units of X commodity because price of X commodity fallen from 10% to 5%. That is what is called real income. So when price of the commodity decreases, real income rises. As a result, demand for commodity increases. And the third factor why demand curve slopes downward from left to right is substitution effect. What is substitution effect? Means price of X commodity decreases. Compared to other Y and Z commodity, the X decreases. So what I will do, I will reduce the consumption of Y and Z. I will consume more of X commodity. Okay. Say for example, Y and Z are maida flour as well as wheat flour. Okay. But the X commodity is called rice. So when price of rice decreases, I want to get more utility from this rice. So that month I will decrease the consumption of wheat flour and maida flour. That is what is all about substitution effect. Because of these three factors, demand curve slopes downward from left to right. The law of demand, negative relation between price and quantity demanded. Now, it is reasonable to expect quantity demand fall when price rises, other things remaining same, ceteris paribus condition. You expect quantity demand to rise when price falls. Normal good. What is normal good in a market? In the sense means all of you must understand that when your income increases, you will demand more of some commodity. That commodity is called normal commodity. It may differ from person to person. If my income doubled, that month I'm going to increase the consumption of any commodity, means that is normal commodity for me. Okay, any commodity in a market that has positive relation with your income is called normal commodity. Now, inferior goods is called any commodity that acts inversely with income. Say, for example, as a college student, when college students' income increases, demand for new textbook will increase. So, the new textbook is called normal goods. When college students' income, which means fathers depositing in students' account, is decreasing very low, in the sense means he will go for buying second-hand goods. instead of buying new book. Okay, so the second-hand book is called inferior goods. New book is called normal goods for a college students. Are you able to understand, students?
Yes, sir.
So any commodity
Yes, sir.
that has positive relation with your income is called normal goods. Inverse relation is called inferior goods. Okay. Now moving on to prices of other goods and services. Substitutes. Okay, I told you substitute. There are two commodity, X and Y. Okay, rice and wheat. These are substitutes. Okay, so goods that can serve as replacement for one another. When price of one increases, demand for other goes up, which means when price of rice increases, demand for rice decreases. As a result, the demand for wheat goes up. Are you able to understand? That is called substitute, which means when price of what is called boost rises, demand for boost decreases, but the demand for Bonvita rises. This is what is all about substitute. Complementary goods. There are certain commodity which go hand in hand. Demand goes hand in hand. So, for example, set-top box and LED TV. When the price of LED TV decreases, what will happen to the demand for set-top box?
Increases.
When we are going to assume, here we have to assume that there is no what is called cable connection, etc. and etc. Okay, so when price of LED TV decreases, demand for set-top box rises. Okay, so for example, burger and ketchup. When price of burger decreases, demand for burger rises, so demand for ketchup also increases. That is what is all about complementary goods. Taste and preferences is another variable that determines demand for commodity. Without taste and preferences, price, income, all the other variable doesn't matter. Another one is expectations. I already told you, I am expecting that price of the commodity is going to rise in future. I will buy today. I am expecting that my income is going to rise later. I will increase my consumption. I am expecting that I will get more profit from stock market. I will increase my consumption now itself. I am expecting that I am going to get a Diwali bonus or Pongal bonus or New Year bonus from the company. I will buy now from Amazon offer or Flipkart offer itself. Now moving on to shifts in demand curve. Already we have discussed about movement along the demand curve that shows relationship between the two variables, that is inverse relationship between price and quantity. Demand is all about movement along the demand curve. Shifts in the demand curve. So the demand curve will shift right side from left to right when all the other variable rises. I have shown one equation. Quantity demand for X is a function of price of X, price of related commodity, income, taste and preferences, and all the other variable. Okay, now quantity demand for X is a function of price of X. We can measure on the same demand curve. Other than these, if any variable increases, means there will be right side shift. Okay, say for example, 1 minute. I should not use more of this. There is eraser. Oh my God. Eraser option is not there. Okay, so say for example, I am at 0.7 when per call tarification is $7. My demand for making call per month is 3 calls. Okay, suppose that my salary increases from $300 to $600. With the given price, my demand for making call will increase from 3 calls to 12 calls. Okay. Similarly, at this combination, when price is $3.5 tarification, my demand for making phone call is 7 calls per month I am making. But my salary increases from $300 to $600. So with the given price, my demand for making call will increase from 7 calls to 18 calls. Are you able to understand?
Yes, sir.
Yes, sir.
So,
Yes, sir.
other than price, any other variable increases in the sense means demand curve will shift right side. As per our equation, other than price, if any other variable decreases, means demand curve shifts leftward or backward. Okay, so this is the shifts in the demand curve we have discussed in the concept of increasing income from $300 to $600. Likewise, you can say that taste and preferences increases, right side shift. Price of related commodity increases, right side shift. Likewise, any other variable increases means right side shift in the demand curve. Decreases means left side shift in the demand curve. So we can say that change in price of a good or services, we can say movement along the demand curve, only one demand curve. When any other factor other than prices, whether it is income or taste and preferences or price of related commodity or advertising expenditure or income, any factor increases means right side shift in the demand curve. So movement along the demand curve is due to changes in price. Shifts in the demand curve is other than price, we can say simply. Then household demand to market demand. Now, what is market demand? We know that sum of all the people, individuals' demand is called market demand. Household demand means each and every individual's demand. The diagram for this individual demand. Here there are three individual: household A, household B, and household C. So, for example, here also we are using pound of coffee per month. Demand is pound, how many pounds of coffee per month person A, person B, and person C are demanding at different prices. When price is $3.5, person A is demanding 4 pounds of coffee per month. At the same $3.5, person B is demanding 0 units, 0 pounds of coffee. At the same price of $3.5, person C is demanding 4 units. Okay, so at 3.5 price, when we see the market demand curve, which is the summation of demand for A, demand for B, demand for C, at $3.5, person A is 4, person B is 0, and person C is also 4. So 4 plus 4, 8. At 3.5, 8 is the demand for coffee. Now, when price decreases from $3.5 to $1.5, when price decreases, person A's demand increases from 4 to 8. At 1.5, person B's demand increases from 0 to 3. At same $1.5, demand for pounds of coffee increases for person C is from 4 to 9. So when price is 1.5, person A's demand is 8, person B's demand is 3, so 11, person C's demand is 9, so 11 plus 9, 20. When price decreases, demand rises from 8 to 20. Okay, decreases in price, increases in demand. When we connect these two combination, you will get a curve that is called market demand curve. When you connect this combination, you will get person A's demand curve. You will get person B's demand curve. You will get person C's demand curve. Are you able to understand, everyone?
Yes, sir.
Absolutely.
Yes. Now we are
Yes,
moving
sir,
on.
yes.
Now we are moving to demand distinction, different kind of demand. One is normal goods. Okay, what is normal good? There is no specific good, students. This differ person to person. Okay, when income increases, demand for whatever goods increases, that is called normal goods. Okay, income and normal goods have positive sign or positive relation. Inferior goods, when income increases, demand for inferior goods decreases. Say, for example, Adayar Ananda Bhavan Idli is considered as a normal goods. When my salary doubles, I can go to Adayar Ananda Bhavan instead of 1 time in a month, 2 times in a month. Okay? Inferior goods. Suppose before increasing my salary, I may be consuming idli from roadside shop. Okay? Small roadside shop. When my salary increases by 5-fold, I may stop consuming idli from roadside shop. I may go to Adayar Anand Bhavan. Okay, that is called normal goods. Provided that, students, other things remaining same. If my taste and preferences is very high on this roadside shop, means I will not go to Adayar Anand Bhavan, even though my income doubles or triples or 10 times. Okay, so taste and preference also another variable. When we are discussing relationship between two variables, we have to keep all the other variable aside. So when income increases, demand for any goods increases means that good is called normal goods. When income increases, demand for whatever good is decreasing, that is called inferior goods. Complementary goods means demand for one goods go hand in hand with other goods. I said LED TV and set-top box, burger and ketchup. Okay, that is what is all about complementary goods. Substitute goods, which means demand for one goods depends upon price of other goods. Say, for example, Boost and Bonvita. There are n number of examples you can take, Rexona and Hamam. Likewise, you can take as much as examples. Okay, price of what is called Honda Activa and Suzuki Access. You can say anything else. When price of Suzuki Access increases, demand for Suzuki Access decreases, demand for Honda Activa increases. That is what is all about substitutes. Then producer goods versus consumer goods. Producer goods is nothing but raw material, cement, steel, so on and so forth is called producer goods. Consumer goods is finished house is called consumer goods. Durable goods and non-durable. Durable, okay. Long-lasting goods are called durable goods. Perishable goods are called non-durable goods. Derived demand and autonomous demand. Demand for one commodity is derived from another commodity. Okay, say for example, demand for set-top box is derived from the demand for LED TV. Okay, when price of LED TV falls, demand for LED TV rises and demand for set-top box also increases. So demand for set-top box is derived from the demand for LED TV. Autonomous demand means there is no such relation, which means demand for ice cream. I am going to demand ice cream. That's all. Okay, it is not assuming it is not related to anything else. If ice cream is relating to milk, then we cannot say it's autonomous demand. Autonomous demand means demand for one commodity does not depend on demand for any other commodity, which means demand does not go hand in hand. Industry demand and company demand. Say for example, demand for mobile phone is called industry demand. Nokia phone demand is called company demand. Now, same thing, forward shift and backward shift in the demand curve. For one example, we don't have time to explain to this greater extent, but for the sake of your simplicity, I am giving one example. One case here is income. Okay, income of one person rises. Take an example of yourself. When your income increases, means this is D0 demand curve, this is D1 demand curve, which means D0 is the previous one, D1 is the new one. Okay, so initially I am consuming here, say for example, 10 units of hamburger I am consuming. This D0 means my monthly income is 10,000. My monthly income is 1,000, say for example. D1 is associated with D1 is associated with 2,000 my income. My income is 2,000 assume here. So D0 is demand associated with 1,000 income. Some of you mute your mic, it's producing noise here. Please mute your mic, some of you. I'm not able to see because I'm in a slideshow mode. So now D1 demand in shifted backward from D0 to D1. Yes.
सर ये जो स्लाइड शो आप दिखा रहे हैं ये अवेलेबल हो जाएंगे सर हमें ईमेल पे?
You are asking me to share the slide?
जी सर.
Yes, I will upload. Kindly allow me to complete. Okay.
Right sir.
Okay. So now listen here, students. Here we are assuming that demand for an inferior goods. We are assuming that hamburger is an inferior goods, steak is a normal good. When my salary is 1,000, I am demanding 10 units of hamburger. When my salary increases 1,000 to 2,000, I am moving backward from here to here on the new demand curve and go to quantity axis. Quantity is 5 units. So when my salary increases 1,000 to 2,000, demand for hamburger decreases 10 units to 5 units because hamburger is considered an inferior goods. Now look at this case. D0 assumed income is 1,000. D1 is income level is 2,000. Previously, I am at this point. Okay, so whatever price it is. So for example, price is 5 or 50, whatever it is. I am consuming 5 units of steak when my salary is 1,000. Okay, when my salary increases to 2,000, demand for steak increases because steak is a normal good. I'll go to here on the new demand curve, go to quantity, and the quantity is 10 units. Are you able to understand?
Yes, sir.
Yeah.
Yes, sir.
Here, price of hamburger rice. Here, what we are discussing here is what is called substitute goods. There are two commodity. Hamburger is hamburger and chicken. Okay, these are what is called substitute goods. When price of hamburger increases, demand for hamburger decreases, and demand for chicken rises. Okay, say for example, price of hamburger increases 1.5 to 3.09. Demand for hamburger decreases 10 units to 5 units. Previously, I am here on chicken. Now, as a result of this decreases in hamburger, I am substituting hamburger, consuming more of chicken. Okay, so this is what is called substitute goods. In case of complementary goods, so for example, burger and ketchup are complementary goods. When price of burger rises, demand for burger falls. When burger demand falls, in the sense means naturally ketchup demand are also decreases. Previously, I was at this point. Right now, I am this point. Okay, I don't want to explain more. If you have any doubt, you can discuss with me later. Since the lack of time, I'm going a little fast. Now, exceptions to law of demand. There is one concept called under what circumstances this inverse relation between price and quantity demand will not work in the sense means there is one factor called Thorstein-Veblen effect that is called conspicuous consumption. Consumption relating to prestige or social value. Say, for example, price of diamond, price of platinum increases in the sense means demand for platinum and demand for what is called diamond will increase because people think that consumption of those commodity will increase my social prestige or social value. Okay, so that kind of commodity demand and price will go hand in hand, positive relation. In that case, law of demand will not be valid. Next one is speculative effect, stock market. When stock prices are keep on rising and rising and rising, so demand for that share price will increase. Next one is given goods. Given good is an inferior goods. What is inferior goods? Means it's a staple goods, staple and most important goods. Say for example, one consumer who is consuming two commodity. One is mutton, another one is potato. Okay, potato is a staple food. Mutton is not a staple food. Okay, so when the price of when there is inflation is taking place in an economy. Okay, so in such circumstances, or say for example, price of potato rises in the sense means since it is a staple goods, essential goods, what consumer will do? They will decrease the consumption of mutton and increase the consumption of potato. Okay, that is what is all about given goods. Given good is a special good. We can say it's a staple goods, essential goods. Okay, for a poor consumer. So in such a case, when price of potato rises, it's an essential commodity. He wants to consume more of that commodity, so he will decrease consumption of mutton and consume more of potato. In such a case, inverse relation between price and potato will not take place. Price of potato rises, demand for potato also rises. Another one is shortage or scarcity period. When there is a scarcity, when there is a shortage for any commodity, people are willing to buy more. Recently, you must have heard that when there is a huge shortage of petroleum products in Sri Lanka, people all are buying huge quantity of petrol at a time when price of petrol was threefold or fivefold higher in that case. So in such a case, law of demand will not be valid. Okay, with this, I am stopping discussion on law of demand, moving on to supply. So what is law of supply means? The amount of a particular product that firm produces. Now all of you have to assume yourself as a producer and think how you will react in a market. Okay, when price of your commodity, you are producing X commodity. When price of X commodity is increasing in the market, you will produce more. Why in the sense means in order to generate more profit. You are producing 10 units of X commodity. Price of X commodity is 10 rupee. Total revenue of your company is 100 rupee. Suppose price increases from 10 rupees to 11 rupees. Your total revenue will increase to 110 rupee. Without making any changes in your production practices, your profit will jump 10 rupees higher. That 10 rupee hike in profit associated with higher prices will induce you to produce more and more in order to generate more profit. This is what is all about positive relationship between supply and prices. Since I don't have much time, I'll go little fast. When price of the commodity keep on rising, $1.5, $1.75, $2.25, quantity supply is increases because you are a supplier. When price, which means very simple, increases in price of X commodity, increases profit of the entrepreneur. That induces him to increase the output. Okay, when price increases, profit of the entrepreneur increases. That induces him to produce more. So supply increases. So this is an example. We are using example. Price per bushels of wheat is rising. Quantity supply of bushels of wheat also rising. 10,000 bushels per month, 20,000, 30,000, etc. So law of supply has positive relation with price and quantity supply. So when price is $1.5, 0 unit of bushels of soybean production took place. When price rises keep on continuously, supply also increases continuously. After a certain point, when it reaches to 45,000, if price rises again and again, there is no changes in quantity supply, because this part full employment took place in an economy. After that, when price rises, the curve will be vertical, no changes in the quantity, because the resources are fully employed. When supply curve is vertical means full employment. When supply curve is upward means price is rising, resources are available in an economy. What are the other factors that determine supply? Means cost of production. When price rises, profit rises, that induces entrepreneur to produce more. Similarly, when cost of production decreases, that also increases profit. Okay, with the given price, when cost of production decreases, profit of the entrepreneur rises. As a result, output rises. In such a case, supply curve will shift right side. Okay, when cost of production decreases, raw material price decreases, government tax decreases, electricity price decreases, output increases. In such a case, supply side will shift right side. Okay, which means the price and quantity demand. When you are thorough about price and quantity demand, the quantity supply and price is very simple. Movement along the demand curve, downward sloping demand curve. Price and quantity demand, movement along the demand curve. Other than price, any other variable increases means demand curve shift right side. Just opposite to that, supply curve. Supply and price is directly related. When price rises, supply are also rises. Now, shifts in the supply curve. Other than price, any other variable increases in the sense means supply curve will shift left side. Any other variable increases in the sense means cost of production increases, electricity increases, government tax increases, raw material price increases, wage rate increases. In the sense means quantity supply will decrease. Such a case, other supply curve will shift backward. All the other variable decreases means supply curve shift right side. Okay, individual supply and what is called market supply. You say in the same way, you can understand firm A supply, firm B supply, firm C supply. When price is $1.75, firm A is supplying 10,000. When price is $1.75, firm B is supplying only 5,000. When firm is 1.75, it goes to 10,000. Now look at this case. When price rises 1.75 to $3, firm A is increasing supply from 10,000 to 30,000. Firm B is rising only from 5,000 to 10,000. Firm C is rising from 10,000 to 25,000. From this itself, we can get to know that firm B is a small firm, firm A is very large firm, firm C is a medium firm. Because of this output itself, we can say what extent the output is rising for the same percentage of increase in price. Okay, summation of supply of A, B, and C. Similarly to demand curve. Okay, now equilibrium. Since this equilibrium is not there in your syllabus, but still I have to discuss about this equilibrium. So the condition that exists when quantity supply and quantity demand are equal is called equilibrium. Equal demand is equal to supply. When there is excess demand, which is also called shortage in supply. When there is excess supply, which is also called surplus or shortage in demand. Okay, now look at the case. Only one diagram I have. Demand curve slopes downward from left to right, supply curve slopes upward from left to right. So this is called equilibrium price. P0 is called equilibrium price, Q0 is called equilibrium quantity demand. Suppose price rises from P0 to P1, in this X means demand will fall from Q0 to Q1. And when price rises means supply will increase from Q0 to Q2. Okay, so this difference create excess supply. This is called excess supply. When there is excess supply, causes pressure on prices to decrease. Okay, as a result of this excess surplus always put pressure on prices to fall. So when price decreases, in this means price will decrease like this. Okay, price will decrease like this. When price decreases, demand rises like this. There is a right side movement on the demand curve. When price decreases, supply decreases because supply is directly related. Okay, when price falls, supply also falls. When price falls, demand rises. Okay, when price falls, demand rises to this direction. When price fall, supply decreases because of positive relation. This process continue until equilibrium take place at point E. Okay, everyone?
Yes, sir.
Yes,
Yeah.
sir.
Then when there is a shortage, you have to understand here, when there is a shortage, okay, or there is excess demand, that put pressure on prices to rise. When price rises, demand falls, and supply rises. That process continue until restoration takes place at point E. Okay. With this, I am moving from equilibrium conditions to equilibrium is a point where market clearing price. Market mechanism is nothing but demand and supply are allowed to act freely. That is called free market economy or capital market or capitalism. Surplus is a situation in which quantity supply is greater than quantity demand. In that case, price will fall. Okay, and another case is called shortage. Shortage in supply or excess in demand. In that case, price will rise. When price rises or price falls, law of demand and law of supply will operate accordingly. Equilibrium will take place in a market. Now moving on to elasticity of demand. What is elasticity of demand? We all know that there is inverse relation between price and quantity demand. Okay, which means when price rises, demand falls. When price falls, demand rises. That we know clearly. Now, what is elasticity? At what extent that what is called the quantity demand responded to changes in price is what is all about elasticity of demand. So price rise, what happened to demand? Naturally, it will fall. When the demand falls, how much it will fall, we do not know. For this reason, we need to understand what is elasticity of demand. If price rises by 10%, definitely demand will fall. But to what extent demand will fall? Whether it is 2% or 20%. For that, we need elasticity. Okay, it is more than 10% or less than 10%. For this, in order to find out the extent to which quantity demand responds to price is what is all about elasticity of demand. There are three types of elasticity of demand. One is price elasticity, income elasticity, and cross elasticity. Okay, which means the effect of price on quantity demand is called price elasticity. Effect of income on quantity demand is called income elasticity. The effect of related commodity, price of rice and price of wheat, okay, is all about cross elasticity. Now, price elasticity of demand. I take only one slide as an example. Responsiveness of demand to changes in price. Nothing but percentage change in demand, which is greater than percentage change in price, is called elastic. Percentage change in demand, which is less than percentage change in price, is called inelastic. So, for example, 10% increase in price, okay, decreases quantity demand by 25% is called elastic. Same 10% increase in price decreases in quantity demand by 2% is called inelastic. In 10% increase in price, same 10% decrease in quantity demand is called unitary elastic. Okay, so there are three elasticities. One is elastic, inelastic, or unitary elastic. Formula is price elasticity of demand, which is equal to percentage change in quantity demand divided by percentage change in price. So if the answer is between 0 to -1, then the relationship is inelastic. If the answer is between -1 to infinity, the relationship is elastic. Why minus symbol means price and quantity demand have inverse relation. Okay, so PED, price elasticity of demand, have negative sign in front of it because inverse relation between price and quantity demand. For example, only one slide is more than enough for you to understand this concept. Price is measured on the y-axis, quantity demand is measured on the x-axis in terms of thousands, or you can take as it is, whatever is given here. D is called demand curve, and what is called example, there is 5 pounds sterling, whatever commodities, price of X commodity or whatever it is, 5 per unit of commodity, quantity demand is 10 units. Okay, now how do we calculate total revenue? Means 5 pound into 100 equal to 500. When we talk about here thousands, so 5 lakhs, 5 pound into 1 lakh, which is equal to 5 lakh, that is called total revenue. Price into quantity demand is all about total revenue. Now, if the firm decides to decrease price, say $5 to $3, okay, now look at this case. Price decreases from $5 to $3. As a result, quantity demand increases from 100 units to 140 units. So total revenue previously only 100. Right now it is increases to this shaded area is called total revenue. Now we are taking two case students. One is elastic demand, another one is inelastic demand. When we have this kind of steeper downward sloping demand curve, it is called inelastic. Okay. Here we are assuming that 10 pound sterling is called price per unit. 5 unit is called quantity demand. When price per unit of whatever commodity it is, X commodity or Y commodity, price per unit is 10 pounds sterling. Demand is 5 units. Producer decides to lower price in order to attract sales in the inelastic demand curve. Suppose price decreases from 10 pounds sterling per unit to 5 pounds sterling. So 50% fall in prices. Now quantity demand increases from 5 units to 6 units. Oh my God. Only 20% increases in quantity demand. Law of demand operates here. Price falls, demand rises, but less than proportionately quantity demand increases. In this case, price elasticity of demand is minus 0.4 because value is less than 1, it is inelastic. If value is more than 1, it is elastic. So in this case, total revenue of the company will fall. How it will fall means previously 10 into 5 equal to 50. Right now 5 into 6 equal to 30. So minus 20. Not a good move. If the company is having elastic demand curve like this, previously $10 the pound sterling, quantity demand is 5. Same example in the previous slide. Right now, producer decides to decrease the price in order to increase sale. And he is decreasing price only by 30% from 10 to 7. Okay, in this case, quantity demand will increase from 5 to 20. Okay, which means 300% increases in quantity demand, only 30% fall in price. In this case, price elasticity of demand is minus 10, minus this inverse relation. 10 means above 1 is called elastic. Total revenue of the company rises. Previously 10 into 5 equal to 50. Right now 7 into 20 equal to 140. So 140 minus 50, which is equal to 90, is the increase in total revenue. This is called good move for any company. And income elasticity of demand, and income means price elasticity we have completed. Income elasticity means responsiveness of income. Normal goods, demand rises, income of a person increases. Inferior goods, demand falls, and income of a person increases. Here, unlike price elasticity of demand, income elasticity of demand have positive symbol, which means plus for normal goods, a negative sign for inferior goods. So if the answer is between 0 to 1, the relationship is inelastic. Above 1, the relationship is elastic. Here, income elasticity of demand have positive sign because income and demand goes positively. Example, I have given a lot of example you people can read when you have a lot of time. So income elasticity of demand is minus 0.5, which means a commodity inferior goods because inverse negative symbol, and the value is less than 1, so it is inelastic. Income elasticity of demand is plus 0.4. Plus in the sense means normal good, and value is less than 1, so it is inelastic. Similarly, if income elasticity of demand is plus 1.6 means plus denotes normal good, value above 1 denotes elastic. Okay, likewise minus 2.1, minus means inferior goods, above 1 value is elastic. So inferior good and elastic. Likewise, you have to understand based on value and symbol. Then cross elasticity of demand. What is cross elasticity of demand? Here, cross elasticity demand formula is percentage change in quantity demand for good T divided by percentage change in price of Y, assuming T and Y are substitute goods. Say for example, rice and wheat, okay, or boost and Bonvita. When price of good Y increases, when price of Bonvita increases, demand for Bonvita decreases, but demand for goods rises. Okay, that is called cross elasticity of demand. The quantity demand for boost is determined by price of Bonvita. When price of Bonvita increases, demand for Bonvita falls, but quantity demand of boost rises. That is called cross elasticity of demand. Look at the case. Symbol cross elasticity will have negative sign, negative relation. Why cross elasticity have negative sign? Here cross elasticity means two substitute goods. One is two complementary. It is for complementary goods. We are taking example of complementary goods. Burger and ketchup are go hand in hand. Okay, it has negative sign. Why? When price of burger increases, demand for burger decreases. Since there is no demand for burger, as a result, ketchup demand are also decreases. So in this case, complementary good have negative symbol. But when we talk about substitute goods, it has positive sign. Why it has positive sign? When price of boost increases, demand for boost decreases, but demand for Bonvita rises. So price of boost, this is price of boost, and here demand for Bonvita. Okay, so when price of boost increases, demand for Bonvita increases, so it has positive symbol. Now computing elasticity of demand, I'm not able to complete what is called demand forecasting. I'll try to show this formula at least. So computing elasticity of demand, we can calculate elasticity of demand by percentage change in quantity demand divided by percentage change in price. So the formula is the same thing, EP minus symbol because inverse relation between two. Percentage change in quantity demand divided by average quantity by change in price divided by average price, which can be explained or analyzed in terms of two formula. One is arc elasticity, another one is point elasticity. What is the formula for arc elasticity? Percentage change in quantity demand, that is Q2 minus Q1 by average price. Okay. So this is what is all about Q2 minus Q1. This is what is all about average quantity. Okay. Then changes in price by average price. Okay, when you do that, you will get one value. That value, based on that value, we can get to know whether the relationship is elastic or unit elastic or inelastic. Similarly, formula for point elasticity is Q2 minus Q1 divided by Q1, P2 minus P1 by P1. What's the difference between this arc elasticity and point elasticity is? Now, look at this case. The difference between A to B, say for example, value here, this 2.14 value here is called arc elasticity. Or between A to B, movement from A to B is called point elasticity. After computing value using arc elasticity formula, you can put your value between A to B, that is called arc elasticity. After using that formula, you will get value, you can put that value here, that is called point elasticity. Are you able to understand?
Yes, sir.
Yeah. Yes, sir. So look at this case. 10% increase in price, quantity demand decreases by 20%. It is called elastic, and elasticity demand is greater than 1. If you have steeper demand curve, price rises by same 10%, but demand decreases only by 4%. It is called inelastic. Okay, so for essential commodity, you will get this kind of inelastic curve. Non-essential commodity or luxury goods or cosmetic goods or scent, fragrance, you will get this kind of elasticity. Unitary, there is no normal curve, there is no what's called specific example. This is called perfectly competitive market or homogeneous market. You will get this relationship. Perfectly inelastic, it can be applicable to salt, it can be applicable to medicine. Whatever price changes doesn't matter. We need to consume equal amount of commodity. It may be insulin or it may be salt, whatever it is, an example. So what are the factors that determine elasticity of demand? One is number of substitutes. When substitutes are very, very high, elasticity also will be very high. When the commodity is necessary commodity, it may be inelasticity. Whatever price it is, we need to consume. If the commodity is very luxury goods, cosmetic goods, when price rises, demand falls greater extent. When price of one's budget, which means 60% I'm spending on that good from my salary, means I'll be very cautious. Okay, in that case, elasticity will be very high. Time, when you are giving more time to the consumer, elasticity will be very high. Brand loyalty, Apple phone price is very high, but still demand is there. Higher brand loyalty, higher demand will be there. Okay, and demand forecasting is one concept that I will discuss with you in next class. Okay, everyone. Am I audible?
Done.
Yes, sir.
Yeah, done, sir.
Yes, sir.
Since time is up, we will continue demand forecasting in the next class. Thank you, all of you.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you, everyone.
Thank you, sir.
Thank you all.
Thank you, sir.
Thank you. Thank you.
Thank you.
Yeah, so everybody.
Hello, students.
Okay.
Very good afternoon to all of you.
Good evening, sir.
Good evening.
Good afternoon, sir.
MBA first semester, right?
Yes, sir.
Yes, sir.
Today we'll be discussing about this business environment and law. Okay.
Okay, sir.
Yes, sir.
Yeah, yesterday we were discussing. There was some kind of interruption in between due to network issue. So all of you are there yesterday. Hello.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yeah. Just give me a minute. I will upload PPT. Then we'll start the class.
Yes, sir. Yes, sir.
Okay.
Just a minute. Can you see the PPT now?
No, sir.
No, sir.
Yes, sir.
Yes, sir.
Can you see?
Yes, sir.
Yes, sir.
Yes, sir. Yes.
Yes, sir.
Yeah. Is it changing now? Now, what is business environment? Is it there?
No, sir.
Which PPT you can see now?
Business environmental law.
This is the first slide, sir.
First slide. First slide.
First slide, sir.
Not changing?
With your name.
No, sir.
With your name. Types of business environment.
Now it is changing?
Yes, sir.
Yes.
Yes, sir.
Okay. Full screen, there is some problem issue. I do not know why it is not there. So let us see. Yesterday we have discussed due to this internet issue. I think you are not able to hear me properly, right?
Yes, sir.
Yes, sir.
Yeah, we'll revise it once again, little bit. Quickly we'll revise whatever we have discussed yesterday and we'll proceed further. Okay?
Okay, sir.
Okay.
Okay, sir.
So we have discussed about business environment, the basic concept of business environment. Like business environment is two parts. One is called as, you can say, business, and the next one is environment. It is very clear from the DA that what is business, all of you know. It's an organization involved in commercial activities aimed to make profit. So, and wherever you are carrying out business, there are some kind of environment. You cannot make a business in space. So wherever you are doing business, some kinds of environment is surrounded. It can be internal, it can be external. So some kind of environment which is beyond your control, some kind of environment which is under your control. Okay. So like business, the word environment refers to the aspect of surroundings. Whatever the surroundings of are there, that can be called as business environment. Business environment may be defined as, it is a set of conditions. Like, what are those conditions? Like social, legal, economical, political, or institutional, that are uncontrollable in nature, which you cannot. These are called as external environment or macro environment, which are uncontrollable in nature. So now let us see the definition of business environment. It is the total of all things external to firms and industries which affect their organization and operation. This is given by Bayard Wheeler. What is a given definition he has given about business environment? The total of all things external to firms. What are the external to firms? Like political, legal, economical, geographical, all these are environment are called as business environment. Similarly, according to Arthur M. Weimer, he has given the definition that business environment encompasses the climate or set of conditions, economic, social, political, institutional, in which business operations are conducted. Almost same definition. Here in details, they have given climate in the sense the economic, social condition, political conditions, business operation where it is conducted. All this are called as business environment. It follows that business environment refers to all factors that have an effect on business decision, performance, and organization. Whatever the factor affecting to your business can be called as business environment. Now let us see what are the different characteristics of business environment. Business environment is the aggregative in nature. What is aggregative in nature? All together, whatever affecting to your business are all total factors affecting to your business constitution business environment. Similarly, it is a combination of specific and general factors. The factor can be specific or it can be general. General factors like economical factor, legal factor, or political factors, because those things are connected to your business. If legal environment is changed, then you need to, like company law has changed, you need to change your company as per the requirement of latest law. Okay. Similarly, political environment. If political situation changes, if some changes are there, so you need to adapt as per the changes. So it is also affecting to your business. Like this, it can be general factors or it can be specific factor for your organization. So it can be both generic or specific. It is relative in nature with respect to differing business factors. So it is relative nature with respect to differing business factors. Like if you are doing same business in different places, the factor may change. So based on that area, you need to adopt your, based on that environment, you need to do your business. So it is relative in nature with respect to differing in business factors. So it is dynamic and thereby susceptible to change. It is dynamic. Business environment is keep on changing. It is not static. So tomorrow political situation is different. You need to adapt the changes. Like economical situation has changed. Like GST has implemented GST or excise income duty. All these things you need to, as per the changes, you need to accept it. So it's a dynamic nature. Or sometimes some natural calamity has happened. Earthquake has come. then based on that it will be affecting to your business. So it keep on changing. It is not dynamic in nature. It is categorically divisible into an overlapping triad of environment. It is overlapping triad of environment in the sense there is several kind of environment like internal environment, external environment, and intermediaries environment. Internal means which is purely within your control and within your organization, like your raw material, your employees, your R&D team. All these are internal. And external, what I told, like economical, political, geographical environment, all these are external. And some are intermediaries, like your supplier, your shareholders. This is intermediary, and these all three are overlapping to each other. So a category, what is that? Category divisible into an overlapping triad of environment. Triad means there's a three kind of environment that is overlapping. It is observable through a set of factors and interrelated components. All the type of environments are interrelated to each other. So it is permeated by assured uncertainty. I told you there is no certainty. It is dynamic in nature. So business environment is assured to uncertainty. Anytime anything may happen. This pandemic situation, many of the business structure has been changed and it is affected to business. So you can say it is permeated by assured uncertainty. So now we can see what are the different types of environment. I am repeating once again because yesterday it was not very clear due to network issue. So next you can see types of business environment. There are, you can categorically you can divide into internal and external. Mainly you can divide into internal and external. So again, external environment can be divided into micro and macro environment. The internal environment is the environment that has direct impact on your business, which includes like 5 M's, like man, material, money, machinery, and management. This is within your control, within the control of business, and this is called as internal environment. So business can make change in this factor according to the change in the functioning of enterprises. You can change as per your wishes, as per your functioning or organization. These internal factors can be changed. Then what is the external environment? External environment refers to the environment that has an indirect influence on the business, which is and that can be beyond your control, which you cannot control. For example, like technological, political, legal, all this kind of environment are called as external. There are 2 types of external environment, which is called as micro environment and macro environment. Let us see which are micro and which are macro. Micro environment in the sense, you can say customers, suppliers, marketing intermediaries, competitors, general public. These are coming under micro environment. And macro environment, like political environment, economic environment, socio-cultural environment, technological environment, ecological and legal environment. This macro environment is called as mega environment, and this is very much important because these are not under your control. So this, to remember this thing, you can short form you can remember PESTEL, 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 macro environment. P for political, E for economic, S for socio-cultural, T for technological, and E for ecological, and L for legal environment. This is called as PESTEL. So these are about macro environment. Then next we discuss about corporate governance. Yesterday we have discussed.
Excuse me, sir.
Yes.
सर ये जो पीपीटी जो आप पढ़ा रहे हैं ये इन आपसे पहले वाले लेक्चरर भी बोल रहे थे कि मैं अपलोड कर दूंगा.
ओके.
जिसमें तो कहाँ अपलोड करेंगे सर, कहाँ से मिलेगा हमें
ये आपको वेबसाइट में, हमारे वेबसाइट में मिल जाएंगे.
वेबसाइट वो यूनिवर्सिटी वाली सर?
हाँ जी, यूनिवर्सिटी वेबसाइट में आपको क्या करना है, आपको वेबसाइट में जाना है, वहाँ पे लाइक स्टूडेंट सपोर्ट सर्विस, उसमें जाके आपको मटेरियल्स, रीडिंग मटेरियल्स, रीडिंग मटेरियल्स में आपको जाके वहां पे देखना है, आपको स्टडी मटेरियल्स मिलेंगे, क्वेश्चन पेपर मिलेंगे, पीपीटीज मिलेंगे। ठीक है
सर, ये जो आप पढ़ा रहे हैं जिस पीपीटी से, ये वाली मिल जाएगी सर उसमें?
हाँ, हम अपलोड कर देंगे।
क्योंकि सर अगर आपकी पीपीटी होगी तब मतलब हमें इजी हो जाएगा, अदरवाइज तो फिर किताब से पढ़ना पड़ जाएगा।
पीपीटी हमने बेस करके, आपके स्टडी मटेरियल बेस करके बनाया हुआ है, सो दैट आपको इजी रहेगा, इट विल बी इजियर फॉर यू पीपल।
मतलब मेरा मेन कंसर्न है सर, यही पीपीटी अपलोड कर दीजिएगा सर काइंडली।
ओके, विल सी। Otherwise, you can send me your email ID so that individual whoever wants, I can send it to them.
ठीक है सर, आपकी email ID सर काइंडली बताएंगे किसमें सेंड करूं?
मैं लास्ट में क्लास में लास्ट 10 मिनट डिस्कशन होगा ना, आप मुझे
ओके सर, ओके।
नाउ वी डोंट वांट टू डिस्टर्ब अदर्स,
राइट
सो लास्ट 10 मिनट्स यू कैन डिस्कस एनीथिंग व्हाटएवर यू हैव।
ओके सर, ओके।
So if you have any doubt, any clarification, you can ask me last 10 minutes. Okay, so yesterday we discussed about the corporate. Okay, fine, thank you. And we discussed about corporate governance. As you see that there are many corporate failures, widespread dissatisfaction seen in the many of the organizations, like internal trading and all this kind of scams are going on. So for that, there need to be certain rules and regulations which should be followed for the transparency of business. So corporate governance is concerned with holding the balance between economic and social goals and in between individual and communal goals. So to balance the business and individuals who are involved in this one, and to make them make the business transparent, this is being corporate governance is being made. The governance framework is there to encourage the efficient use of resources and equally to require accountability for the stewardship of those resources. So it is corporate governance is made. Why it is implemented? Because to ensure that the whatever resources are used, it is efficiently used. Because many of the public, they have used money, invested money on your business. If you are not doing the resources using efficiently, then it is a loss for those shareholders. So you need to make use of the resources properly, and you should be accountable. It should be accountable. It is not that my company, I have done whatever I wish I do. You have the shareholders, you have the responsibility towards the government, towards the customer, and towards your policy holder and shareholders also. So it need to be accountability has to be maintained, and that should be transparently known to all, so that it will be fair and fair business can be done. So the aim is to align as nearly as possible the interest of the individual, corporate, and society. What is the aim of the corporate governance? To make as per the interest of the individual, as per the interest of the corporation and society at a large. Now you can see that corporate governance is a system of rules, practices, and process by which a company is directed and controlled. It is because, as you know, that to make it transparent, there are certain rules, policies, and practices which you should be followed. Because it is as per the corporate governance, all this it is rules are enacted so that you can follow those rules, and these are the guidelines for the company to make it transparent and to effectively run the company. It is a set of mechanisms, processes, and relations by which corporations are managed, regulated, and held accountable. In this case, you will be held accountable. If something goes wrong, then the directors of the company will be held responsible for that one. So this is to be manage the company effectively and transparently. This corporate governance has been enacted. The primary goal is to ensure that the company runs in the best interest of its shareholders. The company runs best interest of the shareholders, because shareholders, they have invested money to your company. So they expect the fair profits and dividends they should get it. So if you are not disclosing them your profit, you are giving them less dividend there, then they will be unhappy on this one, and it is not fair. So that is the reason everything to be transparently informed to the shareholders also. Corporate governance also ensure that the company resources are used efficiently and operations are conducted in fair and transparent manner. So the board of directors is responsible for setting the company's strategic direction. What is the role of the board of directors? They are making strategic direction, strategic decision they are taking, and it should be in the best interest of the company and the shareholders. So the board of directors is accountable to the shareholders and must act in their best interest. And corporate governance also involves the monitoring and oversight of the company's operations by external stakeholders such as investors and creditors. All this because they are also equally involved in your company like investor creditors. So that should be, they are also monitoring your activities of the company. So that should be transparently known to them. You should inform all this to your shareholders and dividend debenture holders about your company's activities. Like when the company goes for calling share, public company, they go for public share. So by that time, they issue a prospectus. In that prospectus, what they do, they give all the risk factors and what is the objective of the company and what is the who are the directors of the company. All the details that they will be informing to the public, so that public will be aware of your company and they can take decision before sharing, before investing their money to your company. So that is the reason corporate governance is involved. So the basic aim is to run the company with a proper manner, like the resources of the company should be effectively used, and effectively it should be communicated to your stakeholders, and with the best interest of the company and the shareholders, you should do the business. What are the importance of corporate governance? Market and investors look for well-managed companies. Why they look for well-managed companies? Because they are expecting more profit from the company. So they are investing their money, expecting that we'll get good earning from the company. So they look for the well-managed companies and respond positively to them and reward such company with higher valuations. So they respond those companies. Once a company asks for the public share, they will be responding positively. Yes, we are ready to share, buy share from the company or invest our money to this company. So if the company is good, then the public will be much more interested. How will you come to know? If their corporate governance is very nice, it is transparent, then the company will be better, and there will be having positive impact on the customers or the stakeholders. Strong corporate governance is indispensable to resilient and vibrant capital market and is an important instrument for investors' protection. So investors, they will be also thinking that our money will be protected. It will not, we are not going to lose our money, or there is no chances of losing, or our money will not be looted, or money will not be misused. So if the corporate governance is good, then they will have strong faith on the company and they will think that their money will be protected in that company. And corporate governance prevent insider trading. Once corporate governance is there, then proper governance is there, then insider trading will be stopped. Like many scams goes on. You must have heard day to day daily news. You must be hearing many scams in the companies. What goes on? So it prevents insider trading also. Under corporate governance, corporates are expected to disseminate the material price sensitive information in timely and proper manner, and also ensure that if such information made public, insider abstain from transacting the securities of the company. What is there? It is to it is expected that they will disseminate the material price sensitivity. They will keep secret. They will not disclose, or they will not do anything within the company until unless it is publicly made. They will inform to the public or their shareholder during normally during the annual general meeting AGM. They release the annual report. In that they disclose each and everything. Before that, you should not do any illegal activities or improper things in your this economical transaction, monetary transaction. Now the next term is called as corporate social responsibility, CSR. All of you must be aware of corporate social responsibility. Every company or every organization who are doing business, they are having certain responsibility toward the stakeholders, like towards the government, towards the employees, towards the shareholders, towards the suppliers. For all of them, you have certain kind of responsibility. Like for example, here I have given one example of ITC Bhadrachalam, a unit that uses tree to make paper. What they do, they use a tree to make paper, but at the same time they plant tree sapling so that ecological balance at the plant does not get upset. So they are balancing, even though they are using, but they are balancing by sapling the plants. So similarly, many of the companies, some of the companies they look for the girl child. Some of the company they go for Wipro and all. They go for this awareness of computer literature to the school children. And some of the company they go for welfare of the animals. Some of the company they go for different practices, different kinds of social responsibility they try to fulfill. So CSR can be defined in many ways and form a various perspective of life. It can be any way, it can be any purpose. So various way it can be done. Some people they go for beach cleaning, sea beach cleaning, or some go for adopting some the villages for taking care of them. Like the social responsibility, many of the organizations they do, and it is in various ways. The responsibility to profitably serve the employees, society, and customer in an ethical and lawful manner. What is your responsibility to? Ethically, you should serve the employee and society very ethical way and lawful manner. An organization obligation to maximize its profit impact and minimize the negative impact on the society. So even though you are earning profit, there should not be any negative impact in the society. For example, you have established a factory, and factory is releasing smokes to the atmosphere, which is polluting the society. So you should have proper facility how to for making the clearance chimney system or something like that. It should be effectively it will be disseminated, and there should not be any negative impact on the society. The concept of business should be actively concerned with the welfare of the society at large. You should look for the welfare of the society at large. Like, for example, Tata company, what they are doing, they have made one city like Jamshedpur city in Jharkhand. What they do, they have Tata company has constructed roads, then sanatoriums, then the schools, parks, all this they have made from the company side for the welfare of the society. Similarly, the concept of business should be actively concerned with the welfare of the society at large, and business collective code ethical behavior toward the environment, its customer, its employee, and investor. We'll see one by one how the different your responsible business is responsible towards the different stakeholders. Now you can see the social responsibility towards the different stakeholders. Like you have the responsibility towards the shareholders, towards the government, towards the customers, towards the employees. You have responsibility. Now we'll see what are the responsibility towards the government to pay taxes in the correct amount. You should not evade tax. What many of the people they are trying to do, they are making subsidiary companies in the name of main company. They are diverting money to the subsidiary company and they are evading tax. So you should not evade tax. So to pay tax in correct amount and correct time. nor the evade excise and other payment. Excise duty and other payment you should not evade. So to obey the legislation in their particular industry, whatever the legislation there for particular industry, you should follow. For example, I gave you the factory. If you want to make a factory, then as per the Factory Act, you need to get the registration. So you need to follow the proper hygienic conditions, health measures, welfare measures. All this you need to follow. Like health measures, you should have first aid centers. You should have other safety measures. Then you should have proper working conditions like lighting facility, the drinking water facility, crash facility where women workers are working, the canteen facility. All this, there are standard rules and regulations. Based on that, you need to follow. The next is to provide employment for the benefit of the government and the nation. You need to, the duty is to provide employment opportunity, give opportunity to the society for the employment. And what are the responsibility towards the investor? You inform them, investors, about important development of the company. What is the development of the company? Which stage it is? And what is the development? You need to inform to your stakeholders like your shareholders, your investor. You need to inform them about your development. Tell the investor if there are any risks regarding their money so that they can decide what they want to do it. So that's what I told. When the company goes for the share, asking share from the public, so they release the prospectus. In that, they will be mentioning all the details of the company and what are the risk factors, whether their money will be safe or not, and these are the risk involvement. If the public they are interested to invest, they can. Otherwise, based on the risk factor, they can take decision. So distribute timely returns and aim the investment at the correct amount. So what you need to do, whatever the profit you have earned, based on that, you need to distribute the profit to your investor with a proper correct amount, and inform the investor if there are more lucrative options for investment. If you have more lucrative option in your company, for example, some of the company they declare for right issue. The right issues for them who are already shareholders. So they give the opportunity to the people who have already invested money to there. So for further development, they ask for the right issues. So these are the responsibility towards the investor. Now, responsible towards the customer. Avoid misleading advertisement. What normally people do, they give the misleading advertisement. So, for example, I gave you the example like bike manufacturing company. If they give the 70 kilometer per liter mileage, but practically it is 50, and they will put a star mark to save themselves. They put the star mark there, subjected to standard machinery conditions. They say that machinery we have standard machinery condition. It is 70 kilometer per liter it gives, but why it is giving 50 kilometer? Due to friction of the road, the application of clutch, the expertise of the driver, and the condition of the road. Based on that, your mileage may be different. So they advertise for 70 kilometer per, whereas practically it is 50. So such kind of, even though they are giving their logic, but such kind of misleading advertisement should not be given to the public. Avoid authorized dealer name misleading customers. Like misleading the customer, they say that we are the authorized dealer of so and so. Even though you are not the dealer, you are the normal retailer. You say that I am the authorized dealer of the so and so company. So public they think they believe that one, and they buy the product. Later on, they found that they are not the authorized dealer, and if there is any defect, they are not able to resolve it. So avoid wrong information. Don't give wrong information to the customer. Whatever you have promised, you need to fulfill that one. If you are giving wrong information, then it is unethical. Avoid exploiting customer. Exploiting customer means you give right kind of product for right price. Don't overcharge to the customer. So that is the reason mandatorily it is to be mentioned that all the product like MRP. What is the MRP? Maximum rated price. It is to be mentioned. So don't exploit to a customer. Avoid collusive agreement with other firms to exploit customer. Don't make any complicated agreement with the different firm so that to exploit your customer. These are the responsible to towards your customers. Then what is the responsible to an employee? That you should give fair wages, bonus and incentive to the employees. You should give fair wages as per your profit. As per the standard rules, you need to give the fair wages. Time to time, the government declares the wages. What is the fair wages? So bonus, you need to pay the bonus to the company to your employees annually. Based on your profit, you need to give them bonus and incentive also. Whoever does good work or done something good for the company, then you should give them incentive to your employees also. Cordial relation towards the employee, you should have cordial relation. It is not that always you will be threatening to your employees that if you do not work, we will retrench you, so we'll dismiss you. So have cordial relationship with you towards the employee. Don't threaten them, threaten your employees. Providing better working condition. Provide better working condition in the sense like proper rest place, resting hour, rest place, proper lighting facility, then drinking water facility. Wherever women workers are there, press facility, so canteen facility. All these are so better working condition you should provide so that your employee will be happily they will be working. School for your employees' children. All these things you need to playground, park, etc. You should give facility to your employees. Creating opportunity for creatives and talent employees. If somebody is talented in your company, you give them opportunity to go ahead. For example, someone is a good sportsman. You give an opportunity to go for the national player or something like that, to go for Asian Games. Give him proper training so that he can develop his skills and caliber. Give proper training to your employees. Until unless you give proper training, they will not be able to work properly because day by day environment is changing, technology is changing. Suppose everything is digitalized. Give digital training, digitalization training to your employee. Don't expect that without training they will be working properly. So they may not be knowing. Give training, then your growth of the company will be better and your employee will be working in better manner. Proper and transparent performance appraisal and promotion. This is also one of the important things, the annual appraisal. And sometimes there is a problem in appraising system. Somebody who is very close to management, they will be getting good appraisal, and somebody who is working good but is not close to the management, they may not be getting. So there should be fairly manner the appraisal should be done, and proper promotion to be given to the deserving employees. The next one is towards the shareholders. To earn a substantial profit, you need to use your resources, company resources in efficient manner, so that to earn profit, substantial profit, so that it will be beneficial for the investor. To provide a reasonable dividend periodically, based on your profit, you need to periodically provide dividend to your shareholders. To maintain the share value in the market, you should maintain the share value in the market so that it will be beneficial for your shareholder. To ensure growth, innovation and diversification, you should go for growth of the company. You should make a strategy for the growth. You should innovate. Some kind of innovation should be there, and product diversification. Nowadays it is very common in product diversification. For example, ITC. Have you heard about ITC?
Yes,
Hello.
sir.
Yeah, what is that? ITC?
Indian Tobacco.
Indian Tobacco Company.
Yes.
Does the company have tobacco business?
Yes.
Not at the moment, sir.
Which one? Any product can you tell me?
So they offer a variety of products as well as hospitality products.
Yeah, varieties of they have. Of course, it is everything Basically, it was a tobacco company. It was a royal company, British royal company. Later on, it became ITC, Indian Tobacco Company. They were having cigarette. They were launching cigarette. So brand name Caesar. If you are aware of it, the brand name of Caesar, they were the first company to launch in India the Caesar brand cigarette. Before that, there was no cigarette company in India. So later on, they have diversified. Now you can see the starting from notebooks, your pen, pencil, that FMCG like biscuits, chips, soap,
Biscuits.
soaps. Then even ITC group of hotels. You can see the diversity, how many fields they have diversified. So diversification is also one of the important aspect for the growth of your company. So to ensure growth, innovation and diversification, assuring security of their fund, they should give the security to their fund. Whatever they have invested, that should not be loser. Proper payment of return of investment. So ROI. So you need to see that you are getting proper return of investment. Whatever you have invested, you should get the return. It is not that company will go to this loser company, the sick company, then again the shareholders, they will be in problem. They will not be getting anything from your company. Then providing correct information about the company. Don't mislead the customer or your shareholders about your information of the company. Give the proper information. Then government, what is the responsibility for the government? The business activity should be law abiding. You should follow the proper, as per the proper law, you should do your business and enact rules and regulations you follow. Then prompt payment of tax and other duties. Whatever, whenever you are due to pay your tax or excise duty, you need to pay. Abiding by pollution control. You need to have your pollution. Suppose you are making an industry, before that you need to take the pollution control certificate, so that you ensure that the society is not affected. So these are the different responsibility. And again, towards the creditor and supplier, like maintenance of cordial relationship, timely payment obligation, providing true correct, all the same. Then society, preventing monopoly. Don't do the monopoly business. We are the only in the area to do such kind of business. So you should not be monopolized. Disposal of waste and effluent. Proper disposal of waste materials is to be maintained. I have seen anybody who is from Delhi area. There is Delhi and Ghaziabad border. There is one area. What is that name? I am forgetting. So all the waste materials are disposed. It later on it became a hill type structure. All the polythene, everything they have dumped there, and it became a hill structure. It will be very difficult to dispose those waste material. So there should be proper disposal of all this waste material. So what has happened there? They have accumulated all the waste material, and later on, lot of birds they used to come there. And nearby there is a like airport. So due to which it is very difficult. This air accidents may take place due to bird hit. Many times it has been seen that due to bird accident has taken place. So it is a very difficult task. If you are not disposing the waste material properly, then it will create lot of issues to the society. Then creating employment opportunity. You need to create employment opportunity for the people in the area. Like for example, this Tata Nano car, where it is manufactured, anyone can say. Initially, what was the plan to make the industry, Tata Nano car industry?
Gujarat.
Gujarat, it was there before that. Initially, they planned some places.
Sir, West Bengal.
In West Bengal.
Initially, they planned in Karnataka.
there was some agitation after that. They gave the employment to the local people also, but due to agitation, they were forced to shift it from West Bengal to Gujarat, I think. So you need to create give the opportunity to the people who are wherever you are doing business. Around that, you need to create an employment opportunity. Similarly, balance regional and rural development. You need to for the regional development as well as rural development, you need to be. It is a kind of social responsibility for your company. These are the all about your corporate social responsibility. Now, the next important thing is business ethics. Business ethics, whenever you do, you need to follow the proper ethics. Like you can say commonly refers to the rules and principles. Business ethics, what is that? A common rules and principles which is accepted in the society. Right code of conduct, what you can add? Right code of conduct. Business is a concern with the truth and justice and has a variety of aspects such as expectation of society, fair competition, advertising, public relations, social relations, consumer autonomy, and corporate behavior in the home country as well. So in this, all the cases, there should be proper ethical way. If you are doing advertisement, you proper ethical advertisement should be given. Public relation, ethically you need to do. So all these things you need to follow the ethics. Ethics is defined as the discipline dealing what is good and bad, and with moral duty and obligation. What is your moral duty and obligation? For that you need to do. Now, what are the different types of ethics? Like individual or personal ethics, professional ethics, and business ethics or corporate ethics. Individual ethics means as per your norms and as per your social and class, and as per your society, whatever prevalent, based on that you should follow the ethics. And something which is not acceptable, you should not do all those kind of things. So like professional ethics, every professional they have their ethics. Like doctors, they have their professional ethics as per their profession. Their lawyers, they have their professional ethics. They need to follow certain codes and conducts there. As per that, they will do. Similarly, teachers, they have their professional ethics. All the professions, they have their independent type of code or conduct which they are supposed to follow. Business ethics, similarly, business like you should not cheat your employees, you should give proper information to your shareholders. All this you need to follow. Business ethics or corporate ethics. So what are the needs of business ethics? Ethics correspond to the basic human needs. So value, it corresponds to the basic human needs. Whatever you do, you should ethically, it is to be done. Value create credibility with the public. When the company is ethical, then public will be create credibility in the public that yes, so and so company is very good. An ethical attitude has the management make better decision. If your attitude, employees' attitude are good, then which will be helping to the company to grow further. If attitude of the people in the company that yes, we are the part of the company, we need to do something to for betterment of the company, then definitely company can grow. If your attitude is not ethical, you will be stealing the property of the company. You will not be. You will try to. You will not be working properly in the company. So all these leads to the downfall of the company. So proper ethics to be followed. Value-driven companies are sure to be successful in the long run. If the company values are good and people attitude are good, then definitely it will be successful company. Ethics is important to protect the society as government and law control do everything. So ethics is important to protect the society. Government alone cannot do everything. So don't expect that government will do everything. So you need to follow certain ethical conditions. Suppose traffic condition. If you do not know traffic, follow traffic rules, so don't expect that every time traffic police will catch you. You may, without his knowledge, you may break the rules, which may causing several difficulties for the other people. So ethics is very important. What are the different approaches of a moral management? A moral management, there are two ways you can say. So, what are the unethical practices toward the customer? What you do? Adulteration. You are doing adulteration in product. You are not giving right kind of product to the customer. Duplicates. In case of there are many products which are duplicate products. Like nowadays, you must have seen that even that I have seen Apple Watch, which is 50,000 minimum 50,000 cost, and it is 5,000 6,000 duplicate Apple Watch launched in the market. So similarly, many of the products, their duplicate products are available. So which are unethical. They are not supposed to do such kind of business. Spurious product, which is hazardous to the customer. You should not sell such kind of product. Injurious product, which causes injury to the customer. So proper protection of the product, it has to be there. So otherwise, injury may cause to the customer. So deceptive advertisement. You should not give deceptive advertisement. You promise something in advertisement and you really give the product a different kind of product. So such kind of deceptive advertising you are not supposed to give. Deceptive packing and container. Container and packaging, while packaging, you should make proper care that packaging is proper. If it is not proper, then something, the product will be it will be harmful for the customer to take such kind of product because it is not properly packaged. Product may get damaged due to poor packaging. And container also, some container, for example, container, the caps, it is loosened. Then definitely if it is loose, then it will be leaking or some kind of this bacteria formation or something. It may be in long run, it may cause. So all this kind of things you need to be checked. So these are the business unethical practices towards the customer. Similarly, what are the unethical practices towards the employee? Low salaries. They are, even though they are more salary, they are giving low salary and giving low wages. Wages, there is the standard wages procedure. Government time to time they declare them what is the minimum wages. So you should follow that rule and don't give low wages to your salary to your employees. The employee children, you need to take care of your employee children for their education, and suppose some small kids are there, for them place facilities and this recreation facility, all this you need to provide to your employee, but they are not giving. So unethical product, they are not taking proper care to your employees. Poor working condition, proper, there is no drinking water facilities, no proper lighting facilities. The workers are, they are not sufficient place for resting. All this kind of things are unethical practices. And towards the government, like tax evasion, bribery and corruption to get license and courts. What they do, they give they bribe to the employee, bribe to the official to get the license, and they involve in corruption also. So all these things, it is a unethical practices. Over invoicing and under invoicing. Sometimes what they do, over invoicing. What is the exact price? They will, whatever the product they supply, but in invoice they will be giving a high rate. Especially in government organization, there will be some people will be there internally. They will be taking bribe and they are quoting something, and they are in fact they are giving something else. Similarly, under invoicing also, whatever you price is there, you should give proper. Then pollution. So some of the industry, they are not taking pollution clearance certificate, and they are starting industry, which is causing creating a wrong impact in the society, and it is harmful for the people who are living around the industry. The payment of money to the party in power and intending price hikes and other unethical. These are all unethical practices in case of towards the government. Now next one is in this unit, economic system of the business. As you know that it is the economic is the set of rules and regulations that govern the production, distribution and consumption of goods and services. So economic system which governs the production, distribution, and consumption of the business. It is a framework within which economic activities are organized and managed. It is divided into basically into three, you can say: market-based, centrally planned, and mixed economic. What are the market-based? It is also called as free market economy. This is based on private ownership and the freedom of individual. In this case, the individual is freedom is with the individual. They can change any kind of economic status of their company, and there is no involvement of government in this one. In this system, government role is limited, providing the legal and regulatory framework. Only like some legal responsibility they need to follow, and some regularity like RBI rules, that SEBI rules, then try TRAI, in telecommunication. Those are this regulatory bodies which gives the standard rules and regulations you need to follow, and legal. Besides that, you have other controls in your hand. That is called a free market economy or market-based economy. Similarly, central planned economies, also known as command economies, are based on government control. This is under the government control. All the economy is under the government control. Like 5-year plan, 10-year plans, all this government they do. Planning commission. This is centrally planned and economies. In this system, the government makes economic decisions and set prices and production level. Price index, all this, then the government owns and operates the means of production such as factories and farms. So based on that, they operate the factories and farms and companies. So these are under the government control, and some controls are there. It is based on the individual or company control. Like similarly, mixed economy, one in which there exists both government involvement and private economic system also. It is widely known as which had both public sector and private sector, mostly mixed economy. This is all about the unit 1. If you have any question, any doubts, you may ask now. So next week we will be discussing unit 2 about infrastructure, but I will be focusing much in the this law part. Like there are the major laws are there, like law of contract, company law, and factory act. These are the main 3 laws which are this company law and contract law is very lengthy, so we'll take more time in that one. So next week in one class we'll be finishing the infrastructure, then we can start this 3rd unit, law of contract. Okay. If you have any question, any doubt, you may ask now.
Sir, this is Debarshi from West Bengal. So,
okay.
First semester MBA and hospital management student. So, sir, actually the thing is that, as you know, we are mainly from life science background. Those who are in the hospital management mainly from the medical background and this. So, after all the session, could you please provide us some kind of suggestions for the semester examination?
Some kind of
suggestions, means which part is most important?
Yeah, I will discuss. Last 1 or 2 classes, one class we will be discussing what are the probable questions usually comes, and it is not much difficult. You need to. This is a general you can go through, but only.
Yes, sir. Here I am just following your lecture, and it means it's understandable. Another thing is that for our first semester, when will it may be held? First semester examination.
Examination, I think November you have taken this admission, right?
Yes, November. We are mainly July 2022 batch.
That is September, means after 6 months it is supposed to be October, November, January, March, and you can expect at the end of March.
Okay.
Because one semester is 6 months.
Okay. But previous year, November 2021 batch, they actually have semester in the July 2022.
So that we will try to manage it within 2 years. Your course should be completed. Due to this pandemic situation, so some kind of overlapping is going on. We are still not able to balance it. It is not we. It is as per the UGC direction we are doing. So So we'll try to manage it, balance it within 2 years. Your course should be over. Okay.
Okay, sir. So if you could, sir, at least means start the examination before, because we will complete all the classes by almost end of March. So at least we have we need some time to study the material, all the materials. So if the examination at the middle of April or at the end of the April,
No,
I think
it will not happen in the middle of the class. Once the class is over, you need to have some time. After that, we'll start. Okay. Don't worry for that.
Okay, yes. That is I'm saying. Okay.
Yeah, fine.
Okay.
Anything
Sir, one
else?
more thing. Research methodology, one subject is there, but
Yes.
no one taken, sir.
No one has taken.
Yes.
Last week, the teacher, he was not here due to some reason. He could not come. Somebody else might have taken. So whatever the class supposed to have, he will take. He will. So instead
Okay,
of one
sir.
class, next time he may take 2 class like this. So
Okay, sir.
Sir, the previous year question. Hello.
Yeah.
Yes, sir. The previous year questions are available till Jan 2022 in your university website. But after that, whatever examination have held, like in July 2022, those questions are not in the website.
That is not uploaded because we need to get it from the examiners meeting. Why do we need that July 2022? This is just model question paper. You should see that, yes, these are the question. These are the way question comes. 5 marks question.
Sir, can you send your email ID?
Yeah. Okay. I'll note it down. Yeah, it is there. You can see now.
Yes, sir. It is there.
My number is also there. Email ID is there. Okay.
Okay. And sir, after this means all the units have completed, also take a session regarding the case study type of questions.
Yeah, I will take 1 class for case study also. Okay.
Yes.
How to solve the case study. I have seen that many of the students, they are not able to write properly how to solve a case study. They are just writing passage writing like school student. They are writing passage writing. It is not that, because you are taking business decision. So you need to know how to write a case laws. Okay.
Okay, sir. Okay.
We'll discuss 1 class. Otherwise, also next class will be, if we have time, we can discuss that how to.
So, sir, please take this into consideration. At least middle of April, please start the examination, or else we'll hardly have time to study, because all of us are, maximum of us are working.
I'll put your suggestion to the management, and if they accept, it is fine.
Yes, sir. Of course. I mean, outside country should be. It's a better delay the exams.
Okay, we'll see. We'll discuss what is the feasibility. We'll see, and we'll let you know.
Okay, sir. Thank you.
Thank you very much. So see you next class next week.
Excuse me, sir.
Hello. Yes.
हाँ सर, ये जो
as this
videos is getting recorded.
One by one, please. Yeah. Sorry. Tell me.
Sir, as this videos, as this meetings are getting recorded, so
Yes.
where can we find the recorded files?
YouTube.
That will see something will be there, but due to the website, some development is going on. So due to space or something like that, because this is the one only university, this server and our server, it is one only. So a lot of materials are there. In that case, we'll see that how it is possible to. Our main motto is to upload those things, but let us see what we
I
can.
think in YouTube you will find it. In YouTube, all the videos are there.
Yeah, YouTube it is there, so you can see those things. Okay.
Okay,
And
sir.
you are most welcome for any kind of suggestion.
Hello?
We'll be happy to.
सर
Yeah.
सर, ये जो पीपीटी है, ये आप ईमेल कर देंगे सर हमें?
कर देंगे बिल्कुल कर देंगे. लास्ट में
नहीं तो ये मैं अभी ये जो आपने पीपीटी अभी दिखाई हैं, ये सब मेरे ईमेल में आप कर बता देता हूँ सर. ईमेल
कर देंगे. ये वंस क्लास खत्म हो जाए ना, फिर आपको दे देंगे सभी को, नॉट ओनली यू, इट विल गो टू एवरीवन.
तो किस में करना, जो आप बता रहे थे स्टूडेंट स्टडी मटेरियल? नेट
आप
जो
देखिए,
आपकी
आप देख जाइए, मैं अभी ये करता हूँ।
जी
आप डिस्टेंस एजुकेशन dd.pondicherry.edu.in में जाएंगे,
जी
ठीक है। वहां पे आप देखेंगे स्टूडेंट सपोर्ट सर्विस,
जी
ठीक है। स्टूडेंट सपोर्ट सर्विस में आप क्लिक करेंगे तो आपको मिलेगा टीचिंग लर्निंग मटेरियल, ठीक है। आप नीचे
जी।
देखिए पर्सनल कांटेक्ट प्रोग्राम पीसीपी का डिटेल रहेगा। काउंसलिंग आपसे ये टीचिंग मटेरियल में जाइए, उसमें यू कैन सी स्टडी मटेरियल्स, MBA पोस्ट ग्रेजुएट अंडर ग्रेजुएट, क्वेश्चन बैंक्स, उसमें है वीडियोस, वेबिनार्स, OERs अभी कुछ डाला नहीं गया, PPTs विल सी उसमें क्या डालना, प्रोजेक्ट गाइडलाइंस, सब कुछ है। जो नहीं है उसको अभी अपडेशन चल रहा है, सो विल बी अपलोडिंग सून। ओके
सर मेरी रिक्वेस्ट ये थी कि जो जैसे आप जो जिससे पढ़ा रहे हैं, जैसे अभी पढ़ाया आपने,
जी,
तो ये वाला ही कन्वेन मिल जाए तो वो इजी हो जाएगा।
मिल जाएगा, डोंट वरी, आपको मिल जाएगा।
तो ये आप उसमें अपलोड करेंगे कि मैं सर ईमेल दे दूं अपना?
आप ईमेल दे देंगे तो मैं आपको भी कर दूंगा।
तो सर
मैं
काइंडली
इसलिए देना नहीं चाहता कि आपको मिल जाएगा, तो आप जैसे आपके बात नहीं कह रहा हूँ, और भी स्टूडेंट होंगे, दे विल बी जस्ट दे हैव गॉट द PPT, they will not bother to attend class, so it will be useful for you also, so attending class is good for you।
अच्छा, ठीक है जी,
डोंट वरी, मैं आपको दे दूंगा। आपको मेरा ईमेल आईडी आप नोट किए ना?
यस सर।
ठीक है, I'll get it. Don't worry.
Okay, sir. Okay.
So one more thing, sir.
Yes.
Regarding the research and projects, are
Okay.
we teamed into groups or we have to do separately? Because when we are doing research directly, it is a different kind of environment that we'll be doing. How are we planning to do it in DD?
Not in DD. You are talking about fourth semester.
Yeah. That I had a doubt regarding
project. Your place, even wherever you are working, there itself you can do.
Okay, it will be individual, not group.
Yeah, individual project only. Individual.